Morning, everybody. Hope you're all well, and I hope you can hear me. If someone could just maybe comment that you can hear me, so I'm not starting this and I'm on mute or something. That'd be much appreciated. Lots to go through today, so just start off straight away with my usual welcome. My name's Tony Sutton. For those of you that haven't watched one of our shows before, I'm the Managing Director of Specialist Financial Services Limited, and I'm your host for today. We always, for every speaker, have a bio and also a claim to fame. This is my bio, basically. So 6 years, after all 6 years of a specialist lender, which I started in 1980, I started in 1983. Subsequently became a broker, went to a brokerage, set up my first company 34 years ago today, weirdly, in 11th of May 1989, which we grew from a two-man operation with my former business partner to have over 141 employees at its peak. I left in 2004 because of various disputes with ex-business partner, which I might mention later on. I traded very, very successfully after setting up Specialist Financial Services Limited in 2004 until the crash took all our lenders away. And I've stayed with the market, and I've basically, I was just working out a couple of minutes ago, I'm about 48 days away from being 60 years old. And this is all I've done since I was 20. So 40 years in the specialist market. I don't know if that's something to be proud of or probably not tell anybody. Time will tell, I suppose. Now, as I mentioned, we've got this interesting fact. Now, I haven't got 10 interesting facts, or not that I can think of anyway, that will be of any interest to anybody. So I've also, not interesting facts, claim to fame. That was interesting, that was the old one. I haven't got 10 claim to fames. So I decided I'd also do a couple of claim to shames. And if you've seen before, you might have seen my cricket one, which was my most embarrassing situation ever. Well, this is my second most embarrassing, and I can't believe I'm actually going to tell you this. So, as you can see, nothing to do with these two, other than what you're about to see. This is my second worst claim to shame. So, all the way back in 2002, I was on holiday with my wife and four kids at Havens Holiday Park, a massive Havens Holiday Park in front, towards the south of France. And on the last night, they were holding a karaoke competition. And there was a decent prize for the winner. I can't remember what the prize was, but I know it was fairly decent. And there was over 750 people in the audience. It was absolutely rammed. I mean, literally rammed. My wife and kids were a dot in the distance when I was eventually on the stage. So after they announced this, and after a lot of pressure from my wife and my kids, and I literally was down about 6 vodkas for some Dutch courage, I put my name down to sing Don't Let the Sun Go Down on Me, the George Michael Elton John version. And it's a song that I'd sung a few times in public before, so I was aware of it and fairly comfortable singing it. And I've got a half-decent singing voice, I'm told, so I wasn't going to embarrass myself too much. I wasn't at first. I was up towards the end, so there was a few decent attempts from other holiday makers, but it was my turn, and I thought I had a good chance of winning it, purely because I thought I could do better than the ones that had been before, because I was the penultimate act. So here we go. So starting off really well. By the end of the first verse, I was getting the confidence had grown. I was like basically doing all the George Michael moves. I was doing a bit of this. I was strolling around the stage, singing, hitting all the high notes. Crowd were really happy, cheering, clapping, and I built it all up. Final chorus, I thought, yeah, let's make this go out on a high note. And then it all went south. The French karaoke version, unfortunately, decided that it would repeat the first verse at the end of the song, which wouldn't have been too bad, but I didn't know, and I didn't realize until it's too late. And if any of you have ever frozen in a public situation, you'll know how I actually felt. The only way I can describe it is like if you have one of those dreams where you're naked in front of thousands of people. That's exactly what it felt like. And I felt terror completely overcome me. There was no more cheering and clapping. The crowd went completely silent. And then the French compere, who was standing at the side of the stage, who was dressed in the tightest shorts I've ever seen in my life and a string vest. He looked like something out of a Sonita video in the 1980s. Began shouting, "Hey, sexy Donny," over and over and over again. I stood there for a minute, literally couldn't move. I was just like open mouth, looking from side to side, thinking, what am I going to do? And I was eventually had to be escorted off the stage in front of all these many, many hundreds of people. I returned to my seat. It felt like a lifetime walking back to my seat with all eyes on me. And my initial confidence in winning evaporated completely when the next singer was actually a professional Frank Sinatra impersonator and absolutely killed it. And I was actually beaten into third place by Frank Sinatra and a 10-year-old girl who couldn't sing. So I've not sung in public since, and whenever that song comes on the radio, I change the station. Can't believe I just told you that, but there you go. That's why I don't do karaoke anymore. So on with the show. Today we're sponsored by Castle Trust Bank. Thanks to them, big supporter of our shows, and we are a big supporter of theirs too. If you can't hear or see us, might sound a little bit daft, just go to type your message box in the bottom right corner. If you're watching on a phone, for example, you might be having some problems. If you are one of the few people to use an Internet Explorer, you will have problems. Unfortunately, Microsoft don't like us using, or don't like companies using anything other than Microsoft Teams for these types of events. And even today, we've had problems loading up the PowerPoint presentations because Microsoft Team Update has stopped that happening. And we are dependent on outsourced technology. Please bear with us. So hopefully we've got none of our speakers talking from a hotel today like we had a couple of months ago, or there won't be any fire alarms going off or any of that nonsense. We have tested everybody's connection from where they will be speaking from, as long as they've stayed in that situation. So hopefully no one's decided to go out on a visit and is talking to us from a car whilst they're driving or anything like that. But please bear with us if anything does go wrong. We have got people on hand that will try and rectify any situation. If you do get any problems, just let us know. As you say, if you have a question at any time, and please ask as many questions as you like, go to type your message in the bottom right corner, and we'll try and get to the questions in the time we have. And today's specialists, you can see, I'm going to cover those in a minute, but we've got Gary who's up first from Castle Trust Bank, then Michael Grant from West One, Gaynor Morgan from YBS, and my old friend Graeme from Spring Finance. And just in case you don't recognise the faces, you might recognise the logos. So there you go. So lots to cover, lots to go through, as you can see. And as always, we're covering 4 completely different subjects. So Castle Trust will be talking, I believe, about buy-to-lets. West One will be talking about bridging. YBS will be talking about commercial. Spring Finance will be talking about second charges. Objectives for today, as always, increase your knowledge of the specialist lenders in the marketplace. Some tips for generating more business, protecting your customer base from others, mainly lenders. Staying on the right side of regulation wherever possible. Not always easy. Also having a bit of fun wherever possible. I'm a great believer that this industry sometimes is a little bit too serious for its own good. So we do try and have a little bit of fun. So if I do take the mickey out of the speakers, please take it in the manner it's actually intended. But we will try and have a little bit of fun where we possibly can. Each presentation lasts 20 minutes, 10-minute Q&A after each session. The speakers have also set themselves questions, up to 4 questions, so they should know the answers to those. Don't give them an easy ride. Come up with as many questions as you possibly can. Anything you think of, don't be shy. Just ask the question. There's nothing that we're going to go, well, you know, that's a daft question to ask. Ask the questions of them, because that's what they're here for. Feedback and CPD. The feedback questionnaire that we ask you to complete is automatically available at the end of today's show. And I'll cover that a little bit later, exactly what that entails. But it will ask questions about the show and what we can improve, and also rating each speaker for their presentation. And you will be emailed your CPD certificate tomorrow at the latest tomorrow by 5:30 p.m. Check your spam folder in the meantime if you haven't got anything, because probably every show we do, about 20 people contact to say we haven't got our CPD, and it's actually sitting in the spam folder. So add us to your safe senders list as well. Okay, so this is just a little bit of highlight of what's coming up, not today, but what's coming up in the future. Now, this is something that we are doing. As you can see, that's Robert Sinclair, the Chief Executive at AMI. And on the 25th of May, we are holding a 1-hour Sutton and the Specialist event, which is going to be about consumer duty, which is a very hot topic at the moment, the subject a lot of you I know are thinking about, concerned about. And as you can see there, the second line, consumer duty in plain English is how we've been advertising this. And that seems to have struck a chord, because the Monday before last, when we went out with the email with the links with consumer duty in plain English, over 80 people signed up in one morning. So we can see that there is a lot of people that are concerned about this. You can register for this at the end of today's show. We'll make the links available for you to do that. But that's going to be, it's by far the most subscribed show that we've ever done, easily. And we might have to actually pay more for our software so we can get everybody on board. But don't miss it, because that, I think, is going to be very, very good. In July, we've got another Sutton the Specialist, which we do in-house called SATS, but just it's Sutton the Specialist. We've got Grace Bennett from the Family Building Society, who's covering some of their fairly unique products and what they're able to offer. If you're not aware of them, then I urge you to attend that one. If you are aware of them, then I also urge you to attend, because you will learn something you don't already know about family building society. And following that, in August, my old friend Roger Morris will be going through EPCs, the real story. You're probably all aware there's lots of stuff going on about EPCs in the marketplace at the moment, and the changes in 2025. Well, the changes might not actually happen in April 2025. So listen to Roger, because Roger's actually working with the government on this, and is probably the most knowledgeable person in the marketplace to tell you how to handle this, and also to ensure that you're not doing stuff at the moment that could mean your clients say, well, hang on, you told me something different. I want compensation, as is always the case. So that's another one we got in August, and you can sign up to all of these now. And if you wish to watch if you missed the one on the 1st of March with Roger and myself, reimagining the remortgage process, that's available as well. Again, links at the end of today's show. It's also, we have a YouTube channel now. Never thought I'd say that. But you can watch that again. That was excellent. It really was excellent. And again, there will be business that you currently are turning away that you will be able to do through Tandem Bank. So have a look if you haven't seen it before. So completing new business, I always cover this in the first part of my business, and I'll keep banging this drum until probably the day I retire, because we all know affordability is a problem. It's probably become a little bit more of a problem today with another base rate increase. And I mean, we've seen it across the board. People who were qualifying for fairly decent sized mortgages are now, like a year ago, are now only able to qualify for half of that amount, purely because of the affordability. So when it comes to remortgaging, are you considering second charges as an option? And the reason for that, quite simply, is that the clean end of the market, pretty much every lender has got a 6-time income rule. As of this morning, we've got one lender who's actually extended that to 6.5 times income. I've got another 8 lenders that do not use an income multiple at all, purely on affordability, which means you will be able to get more cases through. And when rates do drop, and the client then wants to, say, remortgage or further advance with their existing lender who they don't currently qualify with, you've got that opportunity. Because if you don't do it, somebody else will. Because clients still have that need to borrow money. And if you can't do it, or you say you can't do it, are they going to go on Google and see if they can find it somewhere else? More than likely. So how you can advise on second charges is something that you would like to do. You don't want to get involved with companies who charge massive fees, take control, nick your client, all the usual. We can help navigate what can be a complex market. It's not that complex, because if it was complex, I probably wouldn't be doing it. But we can help you to access every lender in the marketplace, help you to source the best product, because we've got our own in-house software. We don't use any of the daft second charge software that's out there, because it really isn't fit for purpose. We've designed our own. We help you with your file compliance, instruct the surveys, issue consent requests where required, package the case on your behalf and check all documentation, pay the income to you on the day of loan completion. There's no loss of control, and we don't charge packager fees. Really couldn't be simpler. So if you're not doing second charges at the moment, but would like to sort of dip your toe in, or you are doing second charges, but you're only got access to 1 or 2 lenders, then give us a call, because believe me, we can get away much, much more business for you. The more business than you would ever believe. If you want to know what's available to you if you become one of our broker partners, or you are already one of our broker partners, this again is going to be this. You can download this from our website. I'll show you later how you can access it immediately. There's a link where you can quite literally download it at the end of today's show. And when it comes to retaining customers, this is very, very important, because we know that some lenders out there are active in trying to pinch. So they think when a case is placed with them and completes, it's then their customer. I've always believed that's not the case at all. It's the broker's customer, and as far as the lenders are concerned, their customer is the broker. But unfortunately, some lenders don't think that way. We found this works very well. So when it comes to the GDPR form that lenders ask clients to sign or tick the boxes or whatever else, just make sure they opt out of all marketing contact. And if it's a paper-based one, we know clients send these back sometimes, and they just sign it and just leave it completely blank. Just write across it, no marketing contact. That's worked well for us, and it will stop lenders. For example, the one we had a couple of years ago with a lender that phoned the client the day of completion and said, next time you want to borrow money, come to us direct, and you won't have to pay a broker fee. Honestly. But it happens. GDPR is still banging this drum because probably over half of the people that we deal with are the broker partners we deal with have done absolutely nothing on GDPR, which is their choice. But this I found, I mean, I don't understand GDPR, to be honest with you. Absolute load of nonsense as usual comes out from government departments. But we try and adhere to it wherever we possibly can. But do I know the finer points of it? Absolutely not. So back in 2018, I was on the ICO website and found a checklist, which I thought that could be useful, but wasn't really fit for purpose because you couldn't do anything with it. So I just copied and pasted it into a document, and we now make this available to everybody. So again, you can download this at the end of today's show, completely free of charge. So if you're not done anything on GDPR, you can just complete it, sign it, backdate it if you want, and then file it somewhere. And at least then you can show if ever you get investigated or anyone asks a question, yes, I've done something on GDPR. And there's also an annual one, which you can do. We do ours every May. Ours is due about a week or so. I think I've got it diarised for. So I just do this every year, annual assessment. You tick in, there's 8 pages on there. Couldn't tell you what one of the questions is. Absolutely no idea, and couldn't care less either. But again, you can download this at the end of today's presentation. Because what could happen if it does go wrong, if you do click on something that you shouldn't do, a dodgy email, or you do get hacked, if North Korea decide to target you, then you will be obviously in problems. You've got to tell the FCA, you've got to tell the ICO. They will investigate you. Could fine you. They will fine you. The FCA will fine you if they need more works of art for their ballroom wall. And if you do, the customers do suffering loss, the ambulance chasers will take what's left. So it's worth having something. If you've got something on file, at least you can say, I've done something on this, but it was a genuine mistake. If you've done nothing at all, they'll take you to the cleaners, quite simply. So I've got lots of good mornings. Stephen said, I had this event starting at 11 a.m. So did it change? Stephen, we always start at 10. The only time we've ever started earlier was 2021 when I was having an operation. So forgive me, not quite sure what happened there. But yeah, we always start at 10 o'clock. First presentation's about to start, so get yourself comfortable. My team will add the first speaker on and his slides, and then we'll crack on. And there we go. Just whilst he's being added, I can see him there. So here we have today's sponsors, Castle Trust Bank, and we have Gary Maher, who we deal with. I speak to Gary probably more than I speak to my wife at the moment, to be honest, because we are a big supporter of Castle Trust and they're a big supporter of ours, as I mentioned before. But this is Gary Maher, sporting a very fine beard. You should have received this morning from us the buy-to-let exclusive that we have through Castle Trust Bank, which is their term buy-to-let product at 5.89%, which in the specialist market is pretty much market leading. A little bit about Gary. Predominantly operated in the finance sector throughout his career to date. Before joining Castle Trust Bank, he worked as a business manager in a BMW dealership for 8 years. He gained promotion from telephone business development manager to business development manager within 12 months of joining Castle Trust Bank, and has now been with them for 2 years. His claim to fame, this is a bit of a weird one, this is a bit of a coincidence. Gary's younger brother Ronan played in the FA Cup for Walsall versus Leicester City earlier on this year. As you can see, Gary got the looks and Ronan got the talent. But the reason it's a bit of a coincidence is because one of my broker partners, who I've known for many, many, many years, since the 80s, his grandson also plays for Walsall, and I speak with him regularly as well. He also plays for Walsall, and Ronan actually replaced him when he got injured. And I'm trying to think of his name. I can't for the life of me think of it. So, yeah, something of a coincidence, but that's his claim to fame. Gary, you still haven't appeared, and I'm not sure why. Don't just love technology. And there he is. No, you're on mute, Gary.
There we go.
Presentation today using sign language. Much better.
Sorry.
That's no problem. Can you hear us?
I can, yeah. And you're quite right that Ronan clearly got the good looks in the family.
No, I said you got the good looks and he got the talent. Yeah, I'm just trying to back you up. I've got quite a dodgy case I want to run past you later. Right, over to you, Gary. I will see you in about 20 minutes.
Perfect. Thank you very much, Tony. And good morning, all. It's a pleasure to be back on the Specialist Web Show. It's something that I personally find a lot of benefit in, so I hope you all will do too. So I'm just going to give you guys a run through of our buy-to-let offering. There will be some time for some questions at the end of the presentation. So I will, without further ado, crack on. So obviously, my name is Gary Maher. I'm Business Development Manager at Castle Trust Bank. What I want to achieve really by the end of today is just to give you guys an understanding of where Castle Trust sits in the marketplace. I think it's important to get understanding out there for what we can do and what
Apologies, everyone. Looks like Gary's got a slight problem with his connection. I can't quite understand why, because I think he's working from his office. So you'd expect a connection at Castle Trust Bank to probably be fairly good, but at the moment he looks like he's in the middle of a song. So we'll try and find out it's try and find out exactly what the problem is. In the meantime, I'll try and fill until we get Gary back. I'm not going to sing, I can assure you. But what can I tell you about Castle? Just whilst Gary comes back, what can I tell you about Castle Trust? Seeing as I missed the first bit because I just popped to the loo as soon as I finished, so I missed this. I missed exactly what you said so far. So, okay, this is just what we found with Castle Trust Bank. It's one of those situations where, I mean, we deal with a lot of lenders, and a lot of the lenders, unfortunately, the biggest problem we have is that quite often they're only as good as their weakest member of staff. What we found with Castle Trust is the staff experience. I mean, pretty much everybody that I've dealt with there, I would probably employ because they are very, very, very good. There's no sort of weak link in the chain whatsoever, which, as we all know, you only need. It's sometimes just getting a deal past an underwriter can be a challenge in itself. They are the most proactive lender I think I've come across in years. And he's back. Microphone, Gary. Microphone.
Yeah, got you. I do apologise.
I'll disappear. I was about to burst into song, but I'm not going to. I don't need to now. So, yeah, I'll stay here. I won't move.
You offering me a job, Tony?
No, I wasn't offering you a job. I was just being nice. Again, as I said before, I've got a really dodgy deal I want to run past you later. So, all right. So, see you in 15 minutes.
Lovely. Thank you. Apologies for that, everyone. But what I was saying is by the end of today, what I want to do is to create an understanding of where Castle Trust sit in the marketplace currently. Highlight what we can do and importantly what we can't do. Obviously time is precious and you want to be using that wisely, knowing that you've got a client to service at the end of everything. You want to spend your time speaking to lots and lots of various different lenders. Highlight some key hotspots of our proposition and really just to make sure that Castle Trust is in the front of your mind as an option for your client. They have that case that fits into the criteria that we'll have a look at now. So, I guess, first of all, Castle Trust is a buy-to-let specialist lender. Who do we lend to? So it's quite a wide range. We lend to, obviously, individuals, but expats, foreign nationals, limited companies based in the UK and abroad. First-time buyers and first-time landlords we will consider. First-time buyers, we would require them to buy in a limited company, but we would certainly consider a first-time buyer. One thing to consider with ourselves is we do not have a minimum income requirement. So this fits in quite nicely with that first-time buyer. It might be their first, well, obviously by definition, first-time buyer, but first foray into the buy-to-let market. So there's no minimum income requirement. We just simply require that there is an income. As long as that's not just purely benefits or anything along those lines, then we're good to go. So what do we lend against? So we would see on a buy-to-let side of things, which is standard single dwellings, etc., HMOs, multi-unit freehold blocks, holiday lets, large portfolios and development exit. We also do a little bit of bridging also. Today's focus will be on our buy-to-let offering. So some key points to our criteria. We try, our product range is quite uncomplicated, I think would be the best way to look at it. So on a buy-to-let, our buy-to-let offering essentially is a 10-year mortgage fixed for 5 years. And that is, we call it term 10, but obviously the rates and whatnot would differ dependent on what option. If we have two-tier approach to buy-to-let with one arrangement fee at a certain rate and then a lower arrangement fee with a slightly higher rate. But obviously available through Specialist Hub, you do have access to our buy-to-let exclusive, which we'll obviously touch on in a little bit more detail in a second. But yes, all products for all types of customers. We don't have a specific HMO product. We don't have a specific holiday let product. It all fits onto our term 10. First-time buyers and landlords are accepted, so it's not an issue for us. We will certainly consider first-time buyers. Foreign nationals and expats, I think, is something that we've always sort of hung our hat on, and continue to do so. So we would, with foreign nationals and expats, there may be some additional due diligence that needs to happen, but we will certainly have no issue with considering them and going through that process. We lend on residential property only. So no commercial or semi-commercial, it is purely residential currently. And the location of the security, we lend on securities in England and Wales only. We don't lend in Scotland. I think there's various sort of ownership rules and laws that are a little bit different to what we're used to in England and Wales. But currently, not Scotland or Northern Ireland, just simply England and Wales. When lending against multi-unit blocks, we do have a minimum size requirement. Minimum, if we're looking at a single asset, is 35 square metres, but we will consider units down to 30 square metres as long as we can see that the average is above 35 square metres. What I will say, though, is that as a lender, you do have to draw the line somewhere in terms of lending criteria. But we try to, because of the size of Castle Trust and the agility that we can offer, it's all very sort of shades of grey. There's no black and white answer. It's all about looking at the bigger picture. If it's not necessarily specifically inside of criteria, it just maybe steps outside of it, and we can get comfortable by looking at the bigger picture of the case, then we will certainly do so. And we have the opportunity, one of the benefits of our size is that the important decision makers with lends can be available very swiftly. So it would be important as a bank, and also myself, the important thing is to come back with a swift response. Be that hopefully blue sky thinking that will be, yes, we can definitely do this. If it is a no, I want to come back to you with a swift no. So we're certainly set up to be able to do that. Our minimum loan size is £200,000. So that is across the board. There will be scenarios where we consider a little bit lower if it's like a part of an existing lend or something along those lines. But that is one rule where we are quite steadfast in that is £200,000 would be our minimum lend criteria. So just going to touch on a couple of areas where we've seen a lot of success recently. One of the key areas would be holiday lets. It has been our busiest product, a boom in inquiries on holiday lets. Seems that pretty much all of Wales appears to be a fantastic or popular holiday let destination. Obviously, everything but along the coast, south, along the Broads and down to the southwest, and of course, essentially anything on a area of natural beauty. We do like to see, if we have a holiday let, there needs to be a plausibility that location-wise it fits. I always use the example that if we have a case of it's a holiday let in Slough, then no offence to anyone that lives in Slough, but personally, I don't think it'd be my first choice to go on holiday. But what we want to see from a plausibility point of view is that the location fits and makes sense. So when lending against holiday lets, we use holiday let income for the income requirement, not an AST income. We do require that the property be free of any barriers to use, for want of a better, or exclusions. So we must be able to see that the property could be used or could be let on an AST as well. But we will, for the purpose of the lend, use the holiday let income. We can lend to limited companies on holiday lets and do so quite frequently. We will also consider first-time buyers on holiday lets. So this is just going back to, it's one set of rules which are relevant of the security that are imposed on there. So we don't have a different, other than these specific to holiday let, the income requirement, the general rules still apply. Residential properties only, again, so again, that's one of those rules that applies across the board. Expats and foreign nationals will also be considered. So although we're looking specifically at holiday lets, a lot of the general rules to our lending still apply. The only thing that is specific to holiday lets would be that income that we would use for affordability. It would be based on the holiday let income. So just got a bit of a case study here, just to give an example of the flexibility that we like to use. So what you see in front of you is a flat which is above a Prezzo restaurant on Canterbury High Street. So it's a top floor flat. So the purpose of the lend was to capital raise to purchase another buy-to-let property locally. So we were approached by a broker who had two other lenders given them a scenario that they can look to how they could assist. So lender one capped the lend to 64% LTV due to them using the AST rental figure for the ICR calculation. Lender two, we've capped it at 60%. We used the holiday let income, but restricted it due to the asset, due to it being above a restaurant, a commercial element, and obviously couldn't gain comfort in there. Now, what we were able to do, obviously, just by getting the right people around the table, as it were, obviously probably not around the table, but on teams, but we were able to review the bigger picture, view the asset, the area. We're able to get comfortable with using the holiday let income, and then we're also able to offer 75% LTV on the back of that. So we found a reason to be comfortable with the asset and the surrounding area, and where possible, obviously on holiday lets, we do use the holiday let income. So those two factors combined for us to give a third option, which came out on top on all three, and we're able to secure that business. So another area where we're seeing an awful lot of success are multi-unit blocks. So a large increase in inquiries on multi-unit blocks and development exits. Just to give you a flavour of how big are the multi-unit, but what sizes are we looking at? We've completed recently on a case that was a 4-unit multi-unit freehold block. We've also, in the recent past, completed on a case for a 67-unit multi-unit block. So it's quite vast. What we are able to do is, and this kind of sets us apart in terms of valuation, is on multi-unit blocks, we will use aggregated valuation on up to 20 units. So that sets us apart in terms of the valuation that we're looking at when compared to block value. It's going to be a higher value that we are then lending against. So certainly a feather in or another string to our bow, sorry, I should say. We consider first-time landlords and investors, foreign nationals and expats again. But here is where it's important, obviously, the size requirements of the units, a minimum requirement of 30 square metres, but we want to see an average of 35 square metres. Now, again, going back to flexibility, if we're getting an average of 34 square metres, it's highly likely that we're going to be able to get comfortable with that. As you said, valuation-wise, we can lend on an aggregate value for up to 20 units. A max lend would be 15 million. Now, upwards of on our standard product on buy-to-let, lend up to 5 million at the rates, be it our standard product, which is 7.15, or the exclusive, which you have availability through specialist at 5.89%. So just to touch on that exclusive, it is a term 10 variation. Obviously, the key difference is obviously the rate compared to our standard product is gone from 7.15 to 5.89%. We can lend up to a maximum 77% LTV gross. So this would be including any arrangement fee. Property type, so it's for standard residential portfolios and multi-unit freehold blocks. So it's portfolios and multi-unit blocks where we see, obviously, you would maybe more likely to see the type of value of security where the loan sizes we're looking at is between 1 and 5 million. So in this scenario, on this particular rate, there would be no movement in coming down from $1 million. So certainly it's specifically on loan sizes between 1 million and 5 million. There is an arrangement fee of 4% on there and an exit fee of 1% as well for the duration of the lend. But key point there, 5.89% fixed for 5 years, and standard residential properties and multi-unit freehold blocks. But obviously Tony, Joe, Hayley and Kirsty will be happy to obviously talk you through. If you have any cases that you feel could benefit from that, I'll be happy to talk you through and look to move that forward for you. So some takeaways from today's session. Essentially, what as I'd mentioned at the beginning before I lost connection, was that I want Castle Trust to be on the dance floor, for want of a better term. So if you have a case, I want Castle Trust to be a genuine option that you would consider for your clients. So be that holiday lets, a multi-unit freehold block, HMO, first-time buyer or expat. Basically, for all of your buy-to-let needs, we want to be at the forefront of your mind. When you get that case through, just think, right, yeah, Castle Trust could help. So please, obviously, via Tony and the girls, do not hesitate to get in touch. But a bit of a whistle-stop tour there. So it concludes our part of the presentation. But I can see Tony is back, so I know we've got some time if there's any questions at all.
Nothing from the delegates yet, so I'm going to ask you your pre-planned questions, Gary. So, could you tell us a little bit more about the exclusive that Specialist Hub has access to?
Yes. So, just repeating myself a little bit there, but so the exclusive that's available to Specialist Hub essentially is a 10-year mortgage fixed for 5 years. Headline, the rate is 5.89%. So that is fixed for the 5-year period. We're looking at loan sizes of between 1 and up to 5 million. And it is specifically for, in terms of security, it's for standard residential portfolios or multi-unit blocks. Now, with multi-unit blocks, it ties in nicely with our sort of bespoke valuation, and that we will value on an aggregate basis multi-unit blocks up to 20 units. So you're obviously having the benefit of the relative market-leading rate and that bespoke nature, so we can maximise what the value that we're going to lend against, and then obviously look at up to 77% gross, including the arrangement fee is where we would be there. But it is an exclusive to Specialist Hub, and just goes to show that obviously the strength of our working relationship with them.
One thing probably that Gary can't stress is the relationship. Yes, it's the flexibility of the product is really where it's key. For those who are using I don't want to say names, but the competitors, who competitors that are out there that are in the same space, there is fairly limited flexibility at times, and quite often you can't even get a deal past the never to be spoken to underwriter. Whereas with Castle Trust, quite simply, if Gary takes it to an underwriter and they say, I don't think this is one for us, then not hate to go over anyone's head, but I'll just then speak to either Anna, the commercial director, or Barry, the managing director. And quite often they can see the bigger picture, and it's then something that they will then look at. So, or we'll find a compromise of some sort. So that relationship is why we got that relationship, because we write tens of millions of pounds worth of business with Castle Trust, quite simply. And long may it continue, because as a lender, we're getting through stuff that we just could not get through pretty much anywhere else without the clients paying probably another 3-4% on top, quite simply. So your second question, Gary, do you have any examples where the use of title insurance has helped a client? I do.
Very much. They are. It is a. It's commonplace for us now to use it. It's not. We try and use it as much as we possibly can. Now, if certain cases that are time precious, so without going into like you've asked for a specific case, but I'll just give you an example of where it would work. Is obviously the use of title insurance is a time saver, a massive time saver. And often the most frustrating part of any lend is, you get to a certain point where that offer goes out, and then it's kind of in the lap of the gods. As much as you have as good a relationship as you possibly can with certain solicitors, etc., you kind of they're doing their thing, and they're not a law unto themselves, but it's just it's a little bit of the unknown. What this title insurance allows us to do, and our insistence on using it wherever possible, is that it just speeds up that process. Obviously, there's certain checks and whatnot and searches that don't need to be carried out because they are covered under title insurance. It is just such a time saver. And sometimes I think there's an old adage that sometimes time kills deals. So if we can cut down on the time that we're spending on the various parts of a deal's life through your pipeline, then more the better. So it's for me, from my point of view, and I think it would be echoed in yours as brokers, it's the time saving that we're getting just by using title insurance wherever possible.
And the other old adage that solicitors kill deals wherever they can, by stretching them out as long as possible, because they charge by the hour.
Anyway,
that's another matter entirely. Someone was typing something. Angela, I've got your message. I've made a note of that, and I will speak to you after today's show. I don't think anyone else. Someone is typing, so I might just stretch this out another 30 seconds. Angela said, "Thank you."
You're welcome, Angela.
Right, Gary. No questions for you from the delegates, which either means they were all covered everything that you could possibly cover, or they'd all disappeared to make a cup of tea whilst you were talking. So we don't know, but I think it's probably the first one. We hope so.
I hope so. Yes.
I will speak to you a little bit later, mate, and have a good morning. And hopefully our next speaker will be joined. Don't do anything, Gary. Don't touch anything. You'll be removed from the room. Don't close down the entire show. So just while waiting on the next speaker to appear and also his slides, I will get myself ready. There we go. Right. And hopefully my clicker's still working. So our next speaker is Michael Grant from West One. First time he's spoken at one of our shows, but I've known Michael for a long time. He's been in the industry for quite a while. I can't quite remember how long, but I'm probably going to find out in 2 slides' time, because I think it's included within that. You should have received this morning which is their Bridging Finance Product Guide. West One have been around a long time in the bridging market, a long time, since pretty much before what happened in 2008. I remember meeting the two founders in a bar around that time, when everything was really going pear-shaped for everybody. And they said, we got this new lender, and we almost strangled the pair of them because we thought they were way too optimistic with the way things were going. But Michael's still not appeared yet, so I will speak very, very slowly. So a little bit on Michael. His role is to maintain, manage and originate new business with West One Loans intermediary partners to provide the best possible service. There he is. A key part of this is to also educate and provide the support needed to work with the business from cradle to grave. Michael, can you hear us, first of all?
Yes, I can. Can you hear me?
And absolutely perfectly. Fabulous. Right. Okay.
Perfect.
He has a wealth of experience and knowledge and has played an integral role within the business for the last 8 years. There you go. I couldn't remember, but now I do. With an ever-changing financial climate, more so in recent times, Michael is self-motivated and driven, a self-motivated and driven individual. Having the ability to help others and being able to visually see the results in doing so pleases him. Having the platform to do so has helped him develop over the years. Outside of work, Michael is a keen sportsman who loves football and cycling when he gets the chance. Cycling, not for me. His claim to fame: many years ago, Michael appeared in a music video for The Killers and shared a cup of tea with the band in a trailer in East London. He's then put in brackets, the video is somewhere hidden deep in the YouTube archives, never to be found. Well, Michael, guess what? We didn't find it.
I hope you haven't found it.
We did look, and I will keep looking. I'm going to get a private investigator on the job to see if we can find it for the next time. So just so you're aware. Over to you. I'll see you in about 20 minutes.
Thank you.
Good luck.
Thank you for the introduction, Tony. Really appreciate that. So, just following on from the introduction, obviously, wanted to talk to you regarding bridging and obviously our place within the market, and ultimately look through to see how best we can support yourselves and the client base that we occupy at the moment. Just going through, I guess the agenda of the presentation is quite simple. So, who are West One? Why work with us? Product portfolio, business, bridging finance, and any information further to that moving forward. Essentially established back in 2005 with the origins being bridging finance. We're one of the largest UK's non-bank lenders here. So again, we've got a good standpoint in terms of the market and where we are today. Our multi-product offering provides integral part of lending solutions across property investment life cycles. So that's really, really important to share that with you as well. Commercially astute and also well-funded, which again, I think is a very, very key point in today's market and considering the current climate that we are in as well. So that's really, really important to point out. And ultimately in doing real transactions in real life economy state. We are committed to developing partnerships and not just on a transactional basis. So the idea really is about ultimately moving forward, working with key partners to yourselves, and ultimately then building that relationship thereafter. So that's really, really important for us to make sure that happens. Overall, we're part of the ENRA Specialist Finance Group. So why work with West One? Unique approach to credit risk. So every case is assessed on its own merits, which again, I think is a very, very valid and key point in terms of when we're looking at it. So everything manually underwritten in terms of our processes, and therefore you're having real conversations with real people to make sure that we're assessing deals on their own basis. So that's key. Bespoke advanced technology solutions to support swift decisions. So again, all our technology in-house that has been built to help support not only myself, but the other key members of the team throughout West One here. So it runs from sales right through to underwriting, right through to credit, right through to valuations in the back office. We're essentially one big team, and therefore it helps with a true smooth process all the way through. Quick and easy application process. Again, this is really, really important. So fast approval process. So for me, this is quite key in terms of us saying that we're one of the lenders that ultimately will try and get things done as quickly as we possibly can. Having that process from top to bottom is really, really important. Leading industry figures in terms of senior management is really important again. So again, the interaction with senior members of staff in order to make key decisions is vital. And therefore we can get things done as and when we need to. Integrated product portfolios. So again, products throughout the property life cycle. So again, that I think it does stand us in good stead to make sure that ultimately not only are we looking just from a bridging perspective, we can also look at the exit as well. So whether that would be through our buy-to-let proposition that we have, or our development funding proposition that we have, or again, development exit. So again, having that life cycle of products is really, really important to understand the journey that the customer goes through, and ultimately we can hold their hand and support them through that. So I think that's a really important point. And just obviously, as I've said there, so products portfolio in terms of our 5 key products that make up West One. So bridging finance, buy-to-let mortgages, development finance, second charge mortgages, and our recently launched residential mortgages. So as the focus is on bridging finance, this is what I'm going to be talking about and kind of giving you a view in terms of where we are. And just to touch on really the market, really the overview of the market from what we'd seen back end of 2022. Just over 9 billion value of the bridging loans market in 2022. Essentially 32% of aggregated bridging loans in 2022. Residential loans continue to dominate commercial sector. 9%. I think we're seeing a lot more now. If I look at the level of inquiries that we're receiving and the deals that are coming through, there's a lot more commercial activity in the market. I think given the current climate, there's probably a lot more restructuring that's going on as well. So that will be maybe loans that come to the end of their term, or ultimately having to look at different options for customers. So whereby they could be thinking work planning, look at development. So again, it feeds nicely into the element of what we want to do, and the ability to be able to lend on all different bases is really key and important to us as well. 61% of customers believe that speed of execution is most important, and I think that definitely rings true, certainly from what we see here, and that's a key strength within the business that we have and occupy. And that comes from many formats, I would say. Experience of staff that we have, so the majority of our staff have been here a number of years, got a wealth of experience across the board, through sales all the way through to underwriting and through to execution. And essentially just the process in which we adopt here is really, really important. So from my perspective is, if I'm looking at inquiries, we like to get our heads around what the nature of the inquiry is, get to grips with it, and as quickly as we can, if the deal makes commercial sense to us, we look at issuing heads of terms with the associated documents for us to move forward and press on with it. And also we try to turn things around within a short period of time. Key thing about speed for me is when you're looking at a deal, try to simplify the deal as much as we possibly can. So the key three things that I always look at is, tell me what the security is, how much you're looking to borrow, and certainly how much are we going to be repaid. Those are the three most important things for me. And then in between that, there's obviously information that we need to gather, which we've got third parties such as valuations team and our legal team who can assist and make sure that we get it done. We've got an internal legal team that can also help us with that, an internal valuations team also that helps aid that strength that we have within the business. 4.96 billion in 2022. The value of bridging loans written in that time has increased by 0.7 year on year, which again, that tells you that the market is still relatively vibrant. I think Q4 was a very, very difficult quarter for a lot, and we saw that. But on the whole, if you're looking at Q1, 2 and 3, it was very, very strong across the board. And therefore, I think there is definitely a lot of business out there in terms of looking at the ability to obviously look at providing opportunities for customers is certainly strong within the market. 25% of bridging loans are used for investment purposes. So again, we're seeing a large amount still for investment within the economy, which is good. And that continues to dominate, and things such as chain breaks, etc., are within that. 44% of the market value is estimated to rise by 44% to 14.52 billion. So some decent, interesting stats there that are coming out of that to make note of. What is bridging finance? So bridging finance is relatively simple. Short-term finance for people looking to borrow money for a short period of time, typically 1 to 12 months, can be used for a wide variety of reasons. It can be secured against all types of properties, so from residential to semi-commercial to commercial to land with and without planning. And the key thing for us is that we can actually transact across the board on all natures of security in that respect. Exit strategy is crucial. So you mentioned what I mentioned before about what we're lending against, what the money's for, and ultimately how we're going to be repaid. Key points, the exit strategy is very, very vital. And it's more important than ever now in the current climate in terms of where we are. Loans available on a first and second charge basis, so we can transact on either. Interest retained or serviced each month, providing the borrower with options depending on personal circumstances. And no early repayment charges is basically what we're looking at in terms of our bridging facilities here. Why use bridging? So Common uses in terms of bridging. So the first reason would be purchases. So again, this can include such as chain breaks, auctions, downsizers, relocations, mortgage delays, tight deadlines, land purchases, and undervalued transactions. Second option why bridging is commonly used is refinancing. So again, this could be remortgaging, gifted deposits, divorce settlements, bankruptcy annulments, probate advances, lease extensions, and property enhancements. And then ultimately that feeds nicely into light and heavy refurbishment products and conversions of non-regulated ground-up schemes and projects that we see within. Again, why use bridging? Asset classes, so residential, regulated and unregulated. So again, it could be primary main residence, or it could be an investment property in terms of the nature of the asset involved. Commercial and semi-commercial properties. So again, like I said, we're seeing a lot of activity within the commercial market currently. And again, that's an area in which we're quite comfortable lending against. And also land with and without planning. So this is quite a unique one. I think we've seen a lot more activity here as well, where people are either raising money against existing sites they have, because at the moment with rising build costs and other associated costs going up, it may be in a situation where people want to hold on to sites and not actually go into planning yet, and therefore look to leverage and raise some equity out of their land that they have, whether it's with or without planning. We can look at both with the viewpoint to look at then the exit as well, which again was important if you're looking at our range of products that we're looking at. So often we see a lot of deals with or without planning on land, where they may be looking to discharge some conditions, or maybe look at enhancing planning, which then feeds nicely into refinancing, potentially with a view to looking at the development facility within West One loans, and that's something that we can potentially look at for you as well. Why West One for bridging? Yeah, I mean, look, reasons why for us, highly experienced and dedicated underwriters are assigned to each case. So you have a dedicated underwriter and you have that personal approach, which I think is very, very important in today's age. Being able to pick up the phone and speak to someone is vital and key. I mean, if I look at my own personal mortgage and try and pick up the phone and speak to someone at a bank, it's very, very difficult to try and get through to someone, then you put through to someone else. So I think having that ability to be able to pick up the phone and speak to an underwriter, have that level of communication, I think is very, very important in today's market. Legal undertakings requested on exception. So again, this reverts back to talking about speed. So when we talk about speed being something very, very important and key, and why we think speed is important. If you think of a typical transaction in terms of a bridge, we don't necessarily ask for legal undertakings, which again helps in the speed process. So imagine a situation whereby you have a bog standard residential property, and we can actually start the legal process and book in valuations day one of receiving the completed application form and associated jobs from the customer. Now, if you put yourself in a customer's shoes, for example, and you had to pay a legal undertaking, the likelihood is that the customer wouldn't want to pay a legal undertaking until they had a valuation carried out, before they had certain guarantees that the loan was applicable to them. Now, if you think booking an evaluation and getting the report back maybe takes on average 7 to 10 working days. So in actual fact, you're actually slowing down the process in that respect, therefore having to wait for evaluation before you started getting into legals. With us, we're comfortable on most cases to actually start the legal process and book in the valuation and get the day one underwrite prior to any legal undertakings taken. So it actually reduces your time frame from cradle to grave in order to actually complete a transaction. And time frames are important, especially auction purchases, deadlines in terms of completing transactions, or even restructuring and refinancing of existing debt where you have a designated redemption date in mind. So this is something that's really, really key, and we are aware of that. We've got many examples that we've done before in the past where we've completed as quickly as 5 to 7 working days, and sometimes within that time frame as well. Certainty of finance. I touched on it on the very, very start about a lender having good liquidity behind them. I think that, especially if we're talking about where we are today, is another key and vital point that needs to be raised, because the market is ever changing. We've been through many, many changes over the years, most recently with COVID and Russia invading Ukraine. These are all things that have a knock-on effect to our economy. So again, working with lenders who have certainty of finance is very, very important. And I think it's a point that can't be missed. Speed of service we touched on when I talk about legal undertakings, but again, if I kind of open up an understanding of speed of service, there are other elements that are important. It's the ability to look at inquiries relatively quickly when it comes across your desk. It's the ability to pick up the phone to speak to the advisor or the introducer about a deal that's come across the desk and get to grips with what the deal looks like, getting terms out, requesting the terms to come back, and then picking up the process in terms of getting it through to underwriting stage and right through to actually completion. Instant access to decision makers across the business. So again, in my time here, that's been one of the key points which I think puts us ahead of a lot of our industry rivals in terms of what we're looking at, is having the ability to speak to decision makers on the front line relatively early on and making sure that we can make key decisions. And ultimately be transparent about what we want to do, manage expectations from the very, very start. These are things that are very important for us. And as I said, solicitors are instructed day one along with the valuation. Useful criteria. So a couple of things just to note. So in terms of geographical landscape, so we're able to lend in England, Scotland and Wales, Scotland mainland only. Loans available from 75,000 all the way up to 20, 30 million plus. We don't necessarily have a ceiling in terms of our loan size. So again, it's on a deal by deal basis, and every deal is worth having a conversation with. One of two answers you can really get. It's either yes, we can, or no, we can't. But I'd much prefer to have the conversation and to make sure that we are putting our best foot forward wherever we can look at. Loan to values up to 70%. Minimum property value we'd look at is 150,000. No early repayment charges, which I mentioned previously, and minimum term is 1 month. So in terms of minimum term, I'm talking about interest being charged. If we are to produce a set of terms, I think we'd probably look at about a 6-month term, however, with a 1 month minimum in terms of interest charge moving forward. Terms available from 1 to 18 months on unregulated transactions and 1 to 12 months on regulated transactions. Exclusion, in terms of properties that we don't necessarily look at. So easier probably to speak about the ones we don't as opposed to the ones that we do. So exclusion include things like petrol stations, active nursing home, care homes, trading pubs, nightclubs, place of worship, sports grounds. And this is not to say there's anything wrong with these securities. It's just the nature of it is a little bit more complex and not really one for us. We are able to tend to complex offshore structures, SIPs, trusts, limited companies, private individuals, high net worths, expats, foreign nationals. So again, our range of who we can lend to is vast. And again, as I said, from my perspective, it's about understanding the deal, getting comfortable with who we're lending to, and getting comfortable with the asset. And our process. So I think I've touched it in a roundabout way, but I'll kind of give you kind of a 1 to 5 guide in terms of how we're looking at it. So step 1, the inquiry. So again, for me, it's about having the salient points of the deal. So understanding what our asset is, as I've said, understanding what the use of funds are, understanding why do we need that money and what's the urgency behind the funds being raised on a bridge. And then most importantly, as I said, is about the exit, having a tangible exit that works in order to repay back our loan. If we don't have that, then we cannot proceed. It's very, very important to have an exit route with all loans that we undertake. So again, it needs to make sense. Make sure the deal makes sense to you, and then obviously translate that to ourselves and the team here at West One. So that's really, really important. Terms. So once the deal does make sense and we're happy with what's been provided, we then look to issue a set of terms. Now the terms are non-binding at this stage, and ultimately the term sheet will just outline our initial proposal. If we're getting to terms stage, the deal has been looked at in terms of inquiry, and then ultimately then the terms will be subject to valuation, subject to legals, and ultimately the information that the underwriter will collate once that paperwork then comes back into us. And then you'll have, if you like, a shopping list of requirements from us. The underwriter will ultimately introduce themselves and therefore give you a direct line into them, which again goes back to the point of communication, which again is very, very key. Having that clear line of sight and communication with your underwriter, with the support myself and other BDMs within the business. And ultimately, once we've got that and we've gone through the underwriting stages, we've got the valuation back, we've done the legals, we ultimately then go through to completion. And that is pretty much the process in terms of bridging and ultimately what we can do here at West One. So look, from my point of view, I think that kind of gives us an overall view of bridging in the short term. I'm happy to obviously any questions that we've got, I'm sure we kind of run through a few. But again, it's just a brief guide to the bridging process here at West One and what we offer. So I'd just like to say thank you for all those who took the time out to listen. And again, we're here to help. Thank you very much.
Michael, thank you. Bit of tumbleweed going across the screen because, again, delegates aren't asking any questions. Don't be shy, delegates. Ask as many questions as you want.
Yeah.
Might have covered it. So we'll go on to the ones you've asked yourself. This is always the big test. But it's very rare that someone can't answer a question they've actually set themselves. It has happened.
Trying to remember what I said now.
Yeah. Maybe I'll ask you someone else's questions. That'll really throw you. Given your experience, typing's really small. Given your experience, how have you felt the market has changed over the last 18 months, and how has this affected your view as a lender today and beyond?
I think the market has changed for a number of reasons, which I touched on in the presentation, with obviously the external pressures that we're facing within the economy. You know, we've gone through numerous changes over the last 18 months. As I said, you know, the interest rates continuing to rise and will still continue on in that vein. Again, obviously, with everything else that's going on abroad and further afield, has a knock-on effect to what is happening in the property industry and the market. You know, we're seeing house prices fluctuate. We're seeing commercial property change in values, and this also has an effect in terms of you know, our thought process in terms of lending. I think, you know, we're very much a lender who likes to take a pragmatic view in terms of how we lend and what we do. And for me, it's always been, what can we do? How can we help? And if that doesn't quite work for you, what can we do to circumnavigate that situation to make sure the deal works for everyone involved? So yeah, I mean, look, you know, we've seen an upward trajectory in terms of pricing across the market, and it's about managing the expectations not only of, you know, yourselves and others. Again, it's managing the customers' expectations as well, and we need each other's help to do that. You know, look, gone are the days where, you know, there are numerous bridging lenders in tow who are charging a race to the bottom in terms of charging ridiculously cheap pricing, and sometimes cheap isn't always the way to go. It's about reliability. I think that's really important. So the market for me has changed in a few different ways. The expectation on pricing, obviously the outward interest rate rises, and ultimately managing customers' expectations.
And there's no saying in the bridging market, if you want cheap, you're not going to get fast.
Yeah, precisely.
It just isn't going to happen. Those that are right at the cheaper end of the market, they might as well be offering a term mortgage with all the questions they ask. We actually have a question from Angela Skinner. Thank you, Angela. Is there a minimum case expectation? We are a small firm starting out. No,
not really. We welcome new introducers and new businesses that we can support. So for us, look, we want to widen our scope as wide as we possibly can. For me, you'll be treated no differently to someone who is, you know, if you like, the phrase sausage factory, or provides us with numerous amounts of business. It makes no odds to me, and that's the one thing about West One that I think is really, really important, is the ability to be able to treat everyone the same. An inquiry from a one-man band or an operation that has 100 staff is no different to me or the team here at West One. So look, we're happy to support new startups and ultimately help kind of promote yourselves and bring yourselves forward. So no difference to us, and more than welcome to have people on board.
Okay, Andrew, I would just point out we have packager status across West One's entire product range, other than development finance, but we don't really do a huge amount of that. But across residential, buy-to-lets, second charges, bridging, we've got that. So we get paid more. So you come through us, you get paid the same, and you get the benefit not just of our expertise, but also our contacts as well. So I believe at West One, I've still got 3 or 4 ex-members of my staff working there from the early 2000s.
Yeah,
so
you have, yeah.
That's always very advantageous, not because we get favours, but because they actually know who we are and they trust us more than anything else, which always
and that's
have a
really,
conversation.
really important. Having that trust element, Tony, is key, isn't it? It's understanding the processes and procedures behind what we do, and it helps with a smooth process all the way through. So I think that's really key.
That's right. And people that have worked with me, I've got 2 members of staff. One member of staff started with me in 97. Another member of staff started with me in 2001. They know those people. They know them well, and they get on with them. Yeah. And that, again, it just the advantage that will give us sometimes from speaking to somebody who, because some underwriters do see brokers, not saying West One, but this is across the industry, they do see brokers as the enemy sometimes. Yeah. And you have to try and overcome that. You overcome it by knowing that person, having employed them. And hopefully I never upset them when I employed them. I don't think I did. So Stephen has asked, it's quite a long question, this one. I did a residential application. I'm not sure, Stephen, this is the right, because Michael's covering bridging, but it's not actually, if it's a residential, as in a term mortgage, maybe I can answer that one for you separately, having spoken to somebody, because Michael's here purely on the bridging. So if that your residential application was a term one, I'll cover. If it's not, just put it wasn't in the comments, and I'll then ask the question. Okay. Will said, I've used you and found you very good. So there you go. Another question you set yourself, how are we doing for time? We're doing fine for time. What are you seeing in terms of transactions, purchases, refinancing existing debt? What are you seeing? And I'll then tell you what we're seeing.
I'm seeing a lot more restructuring of deals at the moment. And that's purely, I think, because values are coming down. LTVs are also on the downward trajectory in certain circumstances. So again, when it comes to refinancing, gone are the days where people are financing at 75% and so on and so forth. I think what I'm seeing across the board now is loan to value appetite maybe is somewhat shifted down a little bit, or security or asset values are slightly tightening. But yeah, a lot of commercial debt out there at the moment. I'm seeing a lot of. There are still an abundance of purchases that are still happening, but I think I'm probably busier with commercial bridging at the moment. There is an element of residential stuff. I see a lot of high value deals as well, but there is a mix there. But I think I would say the large portion of what I'm seeing is probably commercial assets, whether that be land or office to resi, that type of stuff. So I'm seeing more so of that at the moment.
Okay, bridging probably is our busiest business at the moment that's coming through to us. So we're seeing a lot of regulated bridging, mainly for downsizing. I think there's a lot of people.
Yeah, there is. Yeah, that's the point. Yeah, there is a lot.
We've got husband and wife where the kids have left and got getting on with their own lives. So they're sitting in a big 4 or 5 bedroom house, and they think, well, we don't really need this anymore. And why are we paying 750 quid a month on electric and gas?
Very true.
2 of us sitting there using 3 rooms in the whole house. So we're seeing a lot of that. The regulated downsizing, and we're also seeing some very specialist stuff as well. And because of some of the exclusives we've got, we're seeing a lot of refurb. So it's very buoyant at the moment.
Yeah, I think as well off that point, you make a good point there. I think as well, because people are just trying to find avenues to raise money out of their existing portfolios that they have, and that's one way of doing so, right? Thinking, how can we actually maximize what we've got here? And you talk about regulated downsizes again. The cost of living has gone up, so what can we do to combat that? And that's certainly something that people are looking at, is potentially looking at their portfolios, maybe looking at opportunities where they can add to portfolios by buying resi stock or buying other assets, or maybe, like you said, what can we do in terms of, okay, well, we've got this property, we can actually increase the value here if we did a refurb of sorts. And yeah, that's certainly something that we see a lot of as well.
Okay, Michael, thank you. I'm not going to ask any more questions, only because we're running out of time, and my 60-year-old bladder is telling me that I need to pop to the loo. So what we'll do, we'll wrap it up. Simon will remove you from the room. Thank you very, very much. Michael's first time, virtual round of applause for Michael. I thought he was excellent.
Thank you, guys.
Covered everything he needs to cover. Stephen Lowe, I will give you a call this afternoon, because we've got to follow up on our call from earlier on in the week just regarding that, because that wouldn't be Michael's area, the residential mortgage side, but it's something that I can cover with you. I can maybe have a conversation with somebody senior at West One that I know very well. their MD to see if that's something. But I'll speak to you this afternoon. Michael, thank you. See you again soon. Everyone, what we'll do, we'll come back at 11:25. I've just got to find the slide for that, which is going to be here somewhere. There we go. 11:25. Quick comfort break. I might make myself a cup of coffee. I'll see you in 10 minutes. Right, everyone. Gaynor's already. I've actually started this about 15 seconds early, only because Gaynor appeared and I didn't want to be left alone and lonely on the screen. So just make sure, again, you can hear us first of all. Everything's fine. Yeah, all good?
Yeah, I can hear you. Can you hear me?
Perfectly. Okay, so right, everyone, 11:25 just gone. So we will crack on, and I'm going to introduce an old friend of Specialist Mortgage Web Show who's done quite a few of these over the last 1, 2, 3, 4 years. So Gaynor Morgan. I can't remember your official title, Gaynor. If you could just remind me of what that is.
Relationship Director.
Relationship Director. So there you go. Always good to have somebody senior within an organisation, and Gaynor does know her stuff, believe me. You should have received this from us today, which is the broker panel products and processes with Yorkshire Building Society Commercial Mortgages. We have been on panel now for, I think it was during lockdown, and as I've said to Gaynor before, the process of getting approved to be on their panel was probably more stringent than the FCA had when we became fully authorised. So it's difficult to get on there in the first place. So just be aware if you decide to go direct. So a little bit about Gaynor first of all. She's been with YBS, previously Norwich and Peterborough, for just over 18 years. She spent 10 years working in residential lending before moving into commercial lending, where she has happily been for 8 years. Gaynor has experience in dealing with commercial investments, owner-occupied loans, corporate and personal buy-to-lets. Over the course of her years within the finance industry, Gaynor has enjoyed developing her knowledge and skill sets. She has completed her CMAP. This is where I'll wait, I can't pronounce some of this. Carer, DIP, BB and C, and has recently passed her DIP FA. So as qualified as they come is Gaynor. She can probably say them. Obviously, you obviously now know I can't. So Gaynor's claim to fame, and I'm going to ask her to explain a little bit more. I know the reason why, but she has won Peterborough's Sportswoman of the Year twice. Explain, Gaynor.
So yes, I would. So basically, I used to do kickboxing for a good number of years. So I travelled around the country as well as across the globe, fighting in competitions, and yeah, had the pleasure of winning Peterborough Sportswoman.
There you go. Gaynor's also involved in collections when customers don't pay. So if she turns up at their house, they don't pay, then the kickboxing skills emerge. So
don't tell them my side job.
Yeah. Gaynor, over to you. See you in about 20 minutes. Good luck.
Thank you very much. Let me just find me slides. There we are. So as obviously, thank you, Tony, once again for inviting me back. As you said, I have done a number of these now, which is always a pleasure. Although the amount of time I have done them, I still get nervous doing them. So please bear with me. So some of you may or may not know me. I am, as Tony said, Gaynor. I'm one of the relationship directors here at the Yorkshire Building Society. As obviously Tony also said, I have been with the society now for coming up 19 years this July, 10 years working in residential before moving on to commercial, where I've been now for nearly 9 years. At YBS, we do pride ourselves on being a relationship-led lender. So we are focused on providing a dedicated service, which was recently evidenced by us winning the best service from a commercial mortgage provider at this year's Business Money Facts Awards, as well as also being highly commended in the best commercial mortgage provider category also. As the majority of our business is broker driven, we are keen on maintaining the good, strong working relationships with them, but like the team at Specialist and Tony. To help us do that, we do operate a limited intermediary panel, which obviously Tony's had the process of going through to get onboarded. That panel is managed by our business development team, which is also supported by the relationship directors like myself, which are based out of 4 regional hubs. So they are located in Manchester, Peterborough, Bristol and Birmingham. We will only accept applications from the intermediary panel that we have. So if somebody did want to sort of submit an application to us that wasn't on on the panel, you would have to go through Tony and the team, or obviously anybody else that is registered with us. With all of our applications, we do undertake meetings with our clients. This gives us the opportunity to sort of run through the full mechanics of the deal. It also gives them the opportunity to ask us any questions, any queries. As I say to my clients, it is very much a two-way relationship. We obviously want them to be as comfortable with working and dealing with us as us in sort of working with them and the proposition that we're being asked to support. A designated member of staff is always sort of assigned to a deal that comes to us. So at the onset, you'll be sort of assigned a lending manager who looks at the application and what's being offered, whether it's something we can support. They will then do all the collating of the documents and the information before sort of putting the proposal to an underwriter. If obviously the deal's supported and goes to offer, you'll then be assigned a release officer. So that'll be somebody who works alongside you and our solicitors to obviously get the deal across to completion. And then even following sort of completion, you're assigned a annual review officer. And that's somebody who touches base with the client sort of each year just to see how things are going, gives them the opportunity to ask questions or raise any concerns that sort of prompt sort of as they're going through sort of at the back end of that. So we obviously want to make sure that the process and the journey is as smooth as possible for all parties involved, and for our clients to know that they've got somebody to talk to at every stage of the deal. So what do we do here at the YBS? So you'll see on there, we do offer a mixed variety of propositions. So these do include sort of buy-to-lets, holiday lets, HMOs, semi-commercial, commercial investments, opco, propcos. So it is quite a mixed bag of products, and that's obviously so that we can help support sort of property investors for all sort of elements of their portfolios, rather than just the one sort of proposition. Obviously, Tony has shared with you the full products and process guide, so you will be able to see on there the details of sort of the buy-to-let, HMO and holiday range that we have. I'm not going to cover those in detail today. I'm going to run through more about our propositions in terms of the commercial market. So just go through the slides, sorry. There we are. So on the screen in front of you, you will see the details of the semi-commercial. So while I'm talking, feel free to obviously have a look around the full mechanics of the deals. So we have been a keen player in the commercial market now for many years. Whilst obviously other lenders did start to stop lending during COVID, we were keen to remain open in order to provide some sort of facility to our clients. Whilst this wasn't the full sweep of products that we would normally have offered prior to COVID, it was still a range that we felt comfortable in order to facilitate lending to the sectors that were less affected at the time. Obviously, as the market has steadily continued to improve from COVID and recover, we've also started to steadily increase our lending appetite back up to sort of where we were. So you will see over the course of the last couple of years, we've started to reduce the limited parameters we put in place. We're able to consider lending on a wide range of commercial assets. So these range from semi-commercial units, which are properties comprising of obviously commercial assets and residential elements. Mixed commercial assets, so maybe you might have something that has a retail downstairs, offices above. Pure commercial assets, something like a takeaway shop, clothes shop, travel agents, those are fine. Restaurants and pubs are back within our appetite for us to consider, as well as obviously industrial warehouse type properties and offices. Each deal is assessed on a case-by-case basis, so we do take into the merits of each application. We're looking at sort of things not totally exclusive to, but including sort of the loan amount that's being offered, the loan to value, the location of the property and the type of security that's being presented, who the tenant is in the property and what sector they operating, as well as sort of the lease details, so the break options in the lease, the end date of the lease, is there any sort of unusual terms in there. On top of that, we will also look at obviously the client, their background, their experience in the industry and rental market, as well as obviously with the particular property looking at the relet periods, resale periods, and what the valuer deems as the demand for that type of asset in the location. All of these do impact sort of the variable rates that we look at when sort of going out to a client with our terms. Typically, you'll see that our rates, although it says on there in the screen it's bespoke, which I said everything's deal by deal assessed, the rates typically sort of sit between 3.5 over Bank of England base rate up to 4.5 over the Bank of England base rate. Obviously, since the end of 2021, we've seen the Bank of England rates rise quite significantly compared to the consistent levels we had historically. Obviously, with that rise, we've seen a shift in demand with customers now seeking more comfort in a fixed rate product. So what we've been able to do quite recently is launch a fixed rate commercial product to go in line with the semi-commercial fixed rate that we do already have on offer. I'll show you a bit more about the fixed rate commercial as we go through. So semi-commercial product that you've got on your screen, as I said, there is the one fixed rate on there, which is the 5-year fixed rate at 6.45%. The semi-commercial fixed is available for properties that have 50% or more of the capital value derived from the residential elements. So I know a number of lenders base it more sort of on the rental income, but we are driven by the capital value of the asset. If it doesn't fall within that 50% split, we still look to consider lending on the property. That's not a problem. It just wouldn't be eligible for that particular product. So the client could still look to have one of the variable rates available, or we could potentially look to put it on the full commercial fixed rate, which I'll show you in a moment. The product on there, you'll see they can have up to 70% loan to value on that fixed rate, and the client can also potentially have 5-year interest only facility. If it was sort of sub 65% loan to value, then there is potential for us to go up to a 10-year interest only for that same product. Whilst obviously it is 5 interest only option, we can after that period revert to capital and interest repayment, obviously providing the serviceability still sort of stacks out with that. And as I said, you'll be able to see the serviceability requirements on the screen, but also obviously in the pack that Tony's sent on. Moving on to the commercial fixed rate, which I mentioned was something that we've recently launched. So you'll see the details of the two products there on the screen, one being at 65% and one being at 75%. So both are the 5-year fixed rates. We've got one at 699, which is for capital and interest loans, and that does offer you the flexibility to look to go up to 75% loan to value. The other one there is the 715. Again, 5-year fixed rate, but with a smaller loan to value of 65%, but does give you the option for that 5-year interest only facility. As I said, the rate is available to semi-commercial loans that fall outside of the 50-50 split as detailed before. It's also available for mixed commercial investments and full commercial investments. One thing that it doesn't cater for at the moment is if the asset is a pure retail, then we can't offer the interest only facility on that. It would just be the full sort of C&I. Both products do come with a maximum loan of 3 million. So if you did have a client that was sort of seeking more than that over a number of properties, then we could just look to split it down into more than one loan facility to enable them to still take advantage of that product. It would just be, as I said, max loan is 3 mil. Each of the products, again, comes with different serviceability requirements. I won't go into full details about those, whether it's interest only or capital repayment. You can see them sort of on the screen, but obviously fuller details are in the pack from Tony. So what else do you need to know about the offerings that we've got here for our commercial? So minimum loan amount is 500,000. That is a collective debt. So if the clients are looking for a number of loans or even over across a number of different assets, so it's our buy-to-let range or our commercial range, as long as the collective debt is over 500,000, that's fine. We will only lend against assets that are based in England and Wales, and will only look to lend to companies and individuals who are based in the UK. If you do have a UK-based company, we do expect the UBOs for that company to also be based in the UK. I can't sort of consider anything where there is an offshore element. Deal terms, so typically 5 to 25 years for most of the deals. Anything sort of with a debt size over £2 million, we are restricted to a maximum of a 10-year committed term. Although that is a committed period, I can still structure the repayment profile for potentially up to the 25 years. The deal term isn't sort of dictated 100% sort of by the commercial lease, so obviously that is factored when we're looking at an assessment. But if you only had 5 years left on the commercial lease, doesn't mean that we would automatically give you just 5 years of term. What we're looking for is to get down to a comfortable debt position for that deal, either at the end of the first break or at the end of the lease. I'd say that sort of generally typically sits around sort of your 60% loan to value mark. Looking to take clients up to the age of 75, we will base that on the youngest party involved in the transaction. So again, as I mentioned, whilst that may mean we can only do a 5-year term, that doesn't mean that we can't sort of structure the repayment profile over sort of up to 25 years. Obviously, it would just mean at the end of the committed period, the client's going to have that lump sum to pay off. So as long as they understand that and are able to do so. We'll always base lending on sort of the lower of the market value, vacant possession or purchase price. We do have one sort of exception to that, which is where the tenant in the property is what we deem as a blue chip tenant. So that's governed sort of by your Dun & Bradstreet credit rating on the company. So anything with a 4A1 above, which is typically the likes of Betfred, Sainsbury's, Tesco's, we can look to base it on the MV. As opposed to the VP. That's providing we're not exceeding 100% of the VP level. I would obviously still be looking for that tenant to have suitable length remaining on the lease. So if they only had sort of 1 year left or a break option in a year, I probably wouldn't be looking to go to a VP MV lend on that. But obviously if you had sort of Tesco's that had 15 years, no breaks, then I'd quite be open to sort of looking at an MV lend as opposed to a VP. Opco propcos are fine to us as well. We generally treat them in the same way as we would an investment. Given obviously the common ownership between the two entities, we would still look to get accounts for the trading business that's going in there, but any lending would be based on the rental income and the serviceability requirements in terms of that. When lending and looking at the serviceability, we are working on the lower of the market rent or the passing rent in order to meet those requirements. Assets, so we're looking for properties, as I said, that have alternative use, that have good sort of resale periods, the valuer to obviously confirm that they have good demand in their areas, if that's something obviously we're wanting to take on board. With that said, we don't have any current appetite for hotels, bed and breakfasts or vehicle showrooms. They're just sort of not there for us at the moment. And we also wouldn't look to lend just on land alone. We don't lend against any sort of development assets. So we are looking for properties that are readily built and constructed, that are generating income. But what I can do is look to lend against something like that to capital raise to go into a development project. We've seen a number of these crop up, so that is something we can consider. Lending can be considered both personal name corporate structures, so limited companies, LLPs, and we don't require the corporate entity to be a brand new SPV. I know some lenders insist on having a new SPV for each property that they're sort of lending against. I'm fine to have a look at stuff that's already out there, already got assets within it. It's not a problem at all. When lending to a corporate entity, one thing I would say is that we do look to take personal guarantees from the directors' shareholders. The level of that can be sort of discussed on a case-by-case basis, but in most instances, we will always look to take some form of element of PGs. So that's on top of obviously the first legal charge on the property and assignment of rents for any of the occupational leases. Business banking, not something that we insist on, quite simply because we don't offer banking facilities, so the clients aren't under any pressure to switch their facility as part of the lend. And with all of our products, there is ERC periods, which are 5 years, and it's dependent on the product that you're picking as to the level that it sits at. Typically, I'd say we're a vanilla lender, looking for straightforward deals, transactions that we can understand and get comfort behind. Anything that with a complex structure background, it is probably going to fall outside of our appetite. But by all means, obviously have discussions with us, and we can see if it's something we can work with and help support. As I said before, if it's not a deal that sits on our commercial fixed rates, then obviously we do still have the option to go to a variable rate, which is a bespoke rate on there, typically 3.5 to 4.5 over base rate. So, as I said before, we are committed to growth, and we're continuously looking at ways to enhance our offerings. So as part of that, what we've done is, one, we've introduced a broker portal in which now our introducers can submit applications to us. So that's moving away from having to get clients to sign a paper-based application. It also gives our introducers the ability to track the progression of those applications in real time. So as something's being worked on sort of in-house, you can sort of see it as it moves through the stages, as it goes to underwriting, as it goes to offer, and as it goes to completion. We continue to have direct access with our underwriters. So if we do get anything, inquiries that come in that are a little bit quirky, or there's something in there that we're just not sure about, we're able to have those discussions up front with them to sort of gauge their opinion, their appetite. And that to give you a little bit more support to know it's something that we're wanting to progress and take on board. Or it may be something that we come back and say no, but at least you get a quick response from us in doing that. Lending limits have recently been increased, so we're up to £20 million that we can consider for a client. That's sort of across the board, so whether it's commercial, HMOs, you will sort of see on there where that fits in. But that is to new and existing clients. Previously, we only had those limits to existing customers, but we've been able to sort of get those out also to brand new customers. We've also streamlined our documentation process. So we're asking for less information than what we had done previously to support applications. So this making it sort of much simpler process and easier for the client to get a facility from us. Examples of stuff that we've done recently, just to give you a little flavour of what we can do. So we recently lent sort of about £3 million against 3 retail units in Reading. The client had acquired them for cash because he needed a quick turnaround time and completion date. The society was asked to refinance those to replenish the cash that they'd spent within the 6 months of acquiring it. We didn't have to wait the full 6 months to do that because we could understand why they needed to buy it upfront and quicker, and why it was obviously important to sort of refinance it sort of as soon as possible. We did base lending still either on the lower of the purchase price or the values. At the time, it wasn't sort of on an enhanced value. Another deal that we did quite recently, another commercial investment where the ground floor was a bar and a restaurant. The uppers were a commercial offices. We went out at 699 on our new 5-year fixed rate, 65% loan to value, and we were able to get that deal out to offer within 16 working days from the application coming into us. So again, example of using sort of the new portal, the streamlined process, early engagement with the underwriters to get the support, enabled us to sort of be able to get things moving quite quickly. That then just leaves me to really again say thank you very much for opportunity to speak, and passing you back to Tony, see if anybody has any questions, any queries.
When he appears, he's back. Okay, so I'm going to put it on. We got the process. That's fine. Obviously, that's a process for us pretty much. I've literally, while she was talking, I've been checking my messages this morning. So I'm covering for a member of staff who's on holiday. And we've had about 4 cases come over. I might need to have a conversation with you this afternoon. So I'm not sure whether they're actually delegates today or not, but quite weird. It's, yeah, very, very weird what's been coming over to us. Now, you set yourself 2 questions, but you've covered both of them.
Oh,
In what so key length to applicants outside the UK? No, that was covered. Do you consider adverse, like you say, you're more of a vanilla lender, and you don't really like the adverse? You're not overly keen on people, who've had a failed company, say 3 years ago, that went bust owing HMRC a couple of £100,000, that type of situation.
Exactly. I mean, I'd be naive to say that nobody's ever had a situation arise in their life and things crop up. I mean, we've just been through COVID, so we all know unusual circumstances arise. So obviously, if there is something on there on a client's credit file, I'd rather have a discussion with it up front about it than find out as I'm going through the process. So I mean, a small CCJ, if they've had a parking fine they didn't know about, or a dispute, it's quite common. I've seen developers have sometimes utility CCJs because the utility company doesn't know how to get the occupier, so they've whacked them on the owner. It has happened. So things like that I can have we can understand and get behind. Yes, I'd be happy to sort of have a look at those. As you said, failed businesses, £100,000 owed to HMRC, multiple adverse cropping up where it's a consistent common theme with the client. That isn't for us.
No, I understand. There was only no questions as such. It was Mike Hurd, who I've known for a long, long time, and we've done a lot of business together over the years, said he really likes YBS, but the minimum 500,000 loan size kills most of his business. He's then put a very sad emoji. So,
so yeah, I mean, as I said, the 500 is a collective debt. So if the clients do have multiple things, as I said, whether it sits within a buy-to-let, it's a HMO, or it's commercial, semi-commercial, then we can have a discussion. Or I'd also say, whilst I can't do every deal sub 500,000, if you did have something that's at, I know, 495, and it was a very straightforward deal, pick up a phone and have a discussion with me, and if I'm able to help and support it, then I will do. I just couldn't do every deal sub 500.
Okay, and Will was asked, how can I register with you, please? Will, I'd rather you put the business through us for obvious reasons, and we can package it on your behalf. As I mentioned earlier on, the process, I don't know whether YBS are taking on new broker partners. I've no idea. You could try. In the meantime, because it will take a while, in the meantime, I'm more than happy to take the business from you, and you can see how we get on. We allow people to package. It's very rare that we say to somebody, sorry, you can't give the advice to the customer. I did have a client once, a broker partner once, who wanted to put some commercial business through us, but didn't understand what a lease was. So you immediately, that's an immediate alarm bell goes off. You think that person doesn't probably know enough about commercial to be giving the advice to the customer. So, but if it's something that you've done before, or you've got a knowledge of, more than happy to take it. Gaynor, your thoughts
yeah, I mean, I was going to say, and that's why I mentioned earlier, we do have a limited panel. I'll be honest, I do think we are taking a small number of additional people onto it, but we aren't looking to grow it massively. But what we are looking for is people that are going to provide us with, I suppose, a consistent level of business rather than the one-off transactions. Because I guess if we don't have that interaction on a regular basis, you don't understand the way that we work. We don't understand the type of deals that you have, and ultimately the client will end up not having probably the most smoothest transaction in there. So for us, we want to have people on our panel that we deal with on a regular basis, that gets the way that we work and the information that we need, and we understand how they present a deal to us and how it's structured, and have that experience. So yes, I mean, obviously by all means you can reach out to us, but obviously Tony and the team are already registered with us. They know the way that we work, they know the information that we ask for, and they've obviously got the experience in doing that.
Will then said, yes, of course, sorry. So that was it. So, Will, maybe we can speak this afternoon if you've got anything on your desk, and I can add it to the list of cases to speak to Gaynor about. So,
yeah, I mean, by all means, Tony, that again, if we wanted to have a dialogue about the particular case, that's not a problem. Obviously, the deal would have to come in through you guys. But obviously, if he knows the deal a bit more, or we can have a three-way dialogue, that's not a problem.
Okay.
Either.
Gaynor, thank you very much as always. Always great, always very informative, and lovely to have you back. Simon will remove you from the room. Please don't click on that close box in the bottom left corner, because the whole thing will
I'll
collapse.
take everyone with me.
And we will get ready for our final lender speaker.
Thanks very much, guys. Bye.
Thank you. Cheers, Gaynor. Who will appear any time now? Just waiting for the slides to change so I can introduce him. Somebody that I've known for a long time, and I didn't realise until last week exactly how long it was. So when I met him at an industry do, realised we've probably known each other close on 30 years. So this is coming up. We've got Graeme Wade from Spring Finance. There's Graeme. With Graeme, you might want to just pull, if they're blinds, just pull the blinds, because you're there. That's much better. Yeah, we can actually see you now. You look.
There you go.
Yeah, you looked almost holy with the
Well,
halo.
there you go. People have said worse.
So we have Graeme Wade from Spring Finance, a lender you might not have heard of before, but we've certainly heard of them, and a great lender to have on board. You should have received this today. Graeme's talking about second charges today, about their residential and buy-to-let second charges, no doubt. And here's a little bit about Graeme first of all. I always enjoy this bit. Graeme joined Spring Finance in 2015 and is head of sales for second mortgages. Graeme started his career in finance in the late 1990s. City Mortgage Corporation, if those of you that have been in the industry a long time may remember them, that eventually became I Group and then GE Money. He's been involved in the specialist finance market ever since, albeit a few years sabbatical post-2008, where he joined the world of healthcare, which weirdly was with my ex-business partner, who I set up business with in 1989, and who probably realised after 20 years he didn't know how to underwrite a case and went into a completely different marketplace, and he stayed there. Good. Graeme has worked in roles, that's out from my chest, has worked in roles both on the broking side and as a lender, which puts him in a good place to understand where best second charge mortgages are suited in a broker's product suite. In his spare time, Graeme enjoys spending time with his family, helping coach his local rugby club, hitting golf balls, badly, in brackets, at the driving range, and the odd glass of Malbec. And his claim to fame, I thought the claim to fame was he actually went to a gym once, but it's not. He was a former running partner with Brad Pitt, or the true story, Graeme was on the treadmill next to him in the gym in Watford and couldn't finish until he got off. And I believe there's still a restraining order in place against Graeme from Brad Pitt. But
well, I outrun him, so that was the main thing.
You outrun him, okay.
Yeah.
Well, he probably wasn't trying.
Yeah.
And why couldn't you finish until he got off? Was that because you?
It's just a man thing, Tony.
It was a pride thing,
pride.
okay. What wasn't anything like you were sort of like
No,
handcuffed?
it was more pride.
Oh, okay, right, fine. Okay, I'm glad we got that straight, because there was questions to be asked about that claim to fame. Graeme, over to you. I will see you in about 20 minutes. Good luck.
Thank you very much. Right, morning everyone. Thanks for allowing me to take this time to speak. If you've got any questions throughout the presentation, then you can fire those across. We can have a quick look. But as Tony mentioned, Spring Finance in the second charges, you may not have heard of us. We don't do too much marketing in the press or attend many of the awards dinners. So we have a very niche product, and we have been operating in this market for near on 13 to 14 years. So we are trusted people. We've got a lot of experience within our offices. As Tony mentioned, for myself, I've been around in the industry for a long time, both as a broker and as a lender. Our director of mortgages, Shelley Stern, has been in the industry for over 20 years, locations at Haven Bank and Prestige Finance. Our head of underwriting, Kate Hill, she has been on both sides of the fence as a lender for the past 8 years, but as a broker before that for 15 to 16 years. So she knows how to look at the deals, knows how to work them, and always have a conversation about how to work those cases best. So we work well with Tony and the team at the Specialist Hub. The best thing about us is I think we like the verbal communication. So we're always picking up the phone, talking to the brokers, making sure that we can get those cases through in a timely manner. Because sometimes second charges can take a bit longer, maybe than a mortgage or other transactions. So we like to make sure we're keeping the brokers updated as we go along. So that's why we have trusted decisions there. The discussion points today is going to be about who we are, a bit of background, a bit on a market update, because many of you may not know about how the market operates in the second charges, the volumes that's currently being seen. Then we'll have a look at when secured loan may be an option, a product overview, and we'll finish with a couple of case studies. But by all means, if you've got any questions, then let me know. So as I said, I've been in Spring since 2015, but we've operated since 2011. Generally taking clients who may not be able to get those mortgages or further borrowing through the high street because of some recent adverse they've had on their credit profile. Historic and now those issues have been resolved. We like to look at customers differently to other lenders in the first mortgage market and the second, whereas we don't look at taking a credit score. We look at the individual performance of the credit search to see what's going on for the good and the bad, and to make sure that any issues that have historically hindered them have been resolved. So therefore, we're not looking at the credit score to make a decision. We have a human pair of eyes looking through the credit search when it's produced on our broker portal to make sure that we are putting the client in a better position by borrowing the money from Spring Finance. In a second charge market, it would be predominantly for debt consolidation and home improvements, but we'll go through a list a bit later on about how and why a second charge would be used. And in 2022, we entered the bridging and development finance market. So that is a new proposition over the past 12 months, which is going great guns at the moment. So if you have any questions on that, you can also access those through Tony and the team at the Specialist Hub, and he can talk to you more about that. So a bit of background on Spring. It's quite nice to know who we are and where we've come from. As I said, you may not, well, you may have heard of us, but you may not if you don't do the second charge mortgages yourselves. So launched in 2011 as an FCA regulated lender. The senior line debt in 2014 was taken over by Macquarie Bank. And then 2015, the big thing happened. I joined, so it's all getting a little bit better. And then 2018, we refinanced the senior debt through NatWest. And since then, we've been through 2 more refinances with them. The most recent one was earlier this year. So they're very happy with the business we're writing, and the relationships we got with them is very strong. Now, quite a big thing for Spring in 2021, Andrew Bloom, the founder of Marsthaven, later became Marsthaven Bank, joined Spring as a majority shareholder. I believe he left the bank in 2019-20. So he became the majority shareholder at Spring and brought with him a wealth of knowledge into the marketplace to elevate Spring Finance to eventually be one of the, hopefully the largest second charge lender out there, and also bridging and commercial. March 2022, as I said, we launched the bridging product, and July 2022, quite a big scoop for Spring is that Gavin Diamond becomes the CEO at Spring, and he has spent 9 years as the director of bridging at UTB. So we've got a lot of wealth of knowledge coming into our building now, which allows us to continue to grow and move into different fields. But second charges are still where we're going to be ploughing the trade. So any questions on that, give us a call. But I thought it was quite nice to get a scope of where we've come from. The second charge market as a whole is, or was, growing. You can see the figures from there. We're at the peak in August 2022 at 153 million. Now, all conversations during that time was leading up to maybe approaching the 200 million pound mark of monthly completions. Unfortunately, as everyone knows, someone stood up in September and gave a little speech. And after that, the market then dropped down probably about 30%, and now you're seeing about 100 to 105 million pounds worth of completions. So it's been a very strange 6 months in the second charge market. A lot of the lenders at the back end of the year, Q4, had moved away from offering the fixed rate products. The interest rates obviously started to increase, whereas you could have got a second charge mortgage for in the 4s or the 5s. Then you're looking at a second charge mortgage now probably in the high 7s or 8s. It's slowly coming down, but the market is recovering, and the confidence is coming back in. There are some new entrants coming into the marketplace, so that shows us there is a lot of confidence in there, and they should be coming in at the latter part of this year and from next year as well. So, and by then the market will recover. So it's going back to be a useful tool, and I think it's in the broker community. Even more so now, I guess, because of all the extra expenditure taking place on people's credit cards. We've seen a rise in that since the cost of living crisis. More people are living off them. We've seen a slight increase, but not too many, at the start of the year of people taking out payday loans to help with the cost of living. We can help clients who are taking out payday loans. That's not an issue, but it is to make sure they're not, living off them. There's actual genuine purpose of getting that payday loan. In comparison to, say, September 2019, the market was about 105 million. So year on year, it was growing. But unfortunately, in September, the mini budget speech done a lot of damage to the second charge market. But we are recovering, which is good. And as a collective and as lenders, the outlook is very positive. So we are very confident the market is going to move in the right direction as we go through. But I'm guessing 5 minutes ago, the base rate would have gone up, but I haven't seen anything just yet. So why would you get a second charge mortgage? This is the question. So there's a list on here. Unable to obtain for your mortgage at High Street Bank to get a further advance. It may be because the affordability model is different in the first charge market to the second charge market. I imagine the second one is probably a key one right now. There are a lot of people tied into the 5-year fixed rates between the 1s and the 2%, and there's no way you want to get rid of that. So therefore, you might want to borrow extra money for a bit of debt consolidation or home improvements, and therefore the second charge would be a good option. Rates at the moment in the second charge market are probably maybe high to mid 7s, but they're coming down gradually bit by bit. So you can still get some good deals out there. Heavy ERCs on the current mortgage, therefore they don't want to be paying that off and stay in place. They can borrow money on the second charge. As I said before, borrowing funds for debt consolidation, business purchases, or even tax bills. Any legal loan purpose, as long as it makes sense and it's deemed to put the client in a better position, then this is what the second charge market is used for. A lot of the second charge market, they might go out looking for a personal loan. No one actually gets up in the morning thinking, I'm going to get myself a secured loan. They will go online, have a look at the unsecured personal loan, maybe go on the lead generators, maybe go speak to the mortgage broker or the solicitors or the accountants. And with a second charge loan, you can borrow more at a lower rate for a longer term. So it works both ways. Not for everybody, but it has its place in the market, and hopefully you'll spot that opportunity when you're seeing those the clients come through your desk, because their need and their want for borrowing won't go away. It just needs to be made sure they go down the right panel or the right avenue, and that will be from yourself, your advice, and then through Tony as well. As I said, they're able to borrow more over a longer term than their mortgage. So there's a few more benefits, but those are the key ones I could jot down from there. What do we see at Spring? So we are a credit repair lender. We do operate at the adverse end of the sector, but surprisingly, there's often no missed mortgage payments in the last 12 months for the clients we see coming in. Yes, they've had a few sporadic ones maybe historically, but more often than not, there's none actually in the last 12 months. What we do see is a lot of people with unsecured credit, and it's beginning to decline. So they're honouring and they're paying their mortgage, but the unsecured credit is the one that's been affected. So maybe they're robbing Peter to pay Paul, and month on month, and it's going 1, 2, 1, 2, 1, 2 on the credit search. The avenues of a remortgage might be shut down. A lot of the avenues in the second charge market might be closed down, but that's why there's a broad spectrum of lenders out there. Spring Finance will be able to have a look. So there's no limit on the unsecured credit, but it's got to make sense to do it, and it's got to be in the client's best interest. So if you are declining credit and you borrow more money to pay off that credit, and you think you're actually saving the client's money, then the lender might say, well, you're not saving any money because they're not paying the debt. So there's got to be a justification of actually lending the money there. They might have adverse on a secured loan or a second property in the background. So therefore, it will come to spring if that's the case. As I said before, a lot of the lenders out there, especially in the first charge mortgage market, but in the second charge as well, don't like clients who are taking out payday loans. We take a different view on it. And we allow payday loans on a couple of our plans, but just need to make sure they're not using them to live off. And therefore, the assessment of the affordability comes into play, and then we can make the judgment call when it comes in. As I said before, we don't look at the client's credit score, we look at the credit, and to make sure we can pinpoint when the life event happened, and then justify lending the money. You can't do it on every case, and Tony and the team are fully aware of that. We'd like to help everyone, but sometimes it's just not the right thing to do. But we will assist and find a way to hopefully to get the deals across the line. Defaults and CCJs in the past 24 months. A lot of avenues of finance are shut down because of that. We can actually look at those. Hopefully, we're going to be reducing that down to 12 months, but at the moment it's down to 24 months. And the main bulk of things we see is recent life events which cause credit issues. And that could be a loss of job. That could be the boiler's broken down. That could be a breakdown in relationships. Whatever it is, as long as we can identify what's happened and it's being resolved, then hopefully we can come out the other side and assist and help the case go through. This has fallen down a bit here. So yeah, so why spring? At the moment, we offer rates from 9.65% on the lower plans. Will that change with the base rate rise? We'll wait to see how much it's gone up by. Loans are the maximum gross loan we can offer is £200,000 at 70% loan to value, and I'll show you the criteria in a minute. And £75,000 at 80%, and 80% loan to value is our cap at Spring Finance. Other lenders in the market will go higher if you need more, but at Spring we cap it at 80%. We lend in England, Wales, and mainland Scotland. I was actually picked up the other day on this one for mainland Scotland, because apparently mainland in Scotland is a place in the Orkney Isles. But we lend in Scotland, mainland Scotland, not just in mainland Scotland. We support applicants with adverse credit, as I've said. So if it's declining, we accept it, but we need to make sure we understand why it's been declining. And by using the spring loan, we're putting them in a better position. A big thing we do, which other lenders don't do, is we allow IVA and debt management to remain in place this is deemed the best advice when it comes through to us. Debt management plans, we'll just take what the clients are actually paying towards it. An IVA, if it's going to remain in place, it always needs to get the consent from the supervisor for the mortgage to take place. So if you have clients within an IVA, and a lot of these are historic, and now people are trying to get out of them, both IVAs and debt management plans, because they want to clean up the credit ultimately and move back up to the high street. So people maybe put them for the wrong reasons a while ago, and maybe recent as well. But we can either keep them in place or we can pay them off. We want to make sure they're being paid, but either way, we can keep in place or take it off. Another big niche we have out there is we can actually annul bankruptcies from the loan proceeds. Now, this allows clients to dramatically improve their credit by paying off the bankruptcy. And this is done from working alongside the broker, and the clients will also have a solicitor acting on their behalf. Hopefully a solicitor who's involved in bankruptcies or insolvency, so they're not doing. And Spring will transfer the money to the solicitor the day before the court hearing and hold it in trust. And once we get that certificate of annulment, the loan can then complete. So it is quirky, it is nichey, but it can be done, and we do them quite often. By no means our main bulk of our business, but we are, I wouldn't say experts at it, but we know exactly what we're doing, and we'll hold your hand, and we'll talk to Tony about that as well. This has moved down, so except 12 months self-employed. A lot of lenders out there might want minimum 24 months, 36. we accept a minimum of 12 months self-employed with the most recent tax overview and tax summary. On all self-employed cases, we still get 3 months business bank statements to prove that the company is still trading. If there's any dividends on there, which is greater than the income, we'll then have to get a copy of the full accounts, or we can get an accountant certificate. So we do dig a bit deeper on the self-employed. Applicants within probation period, we can accept up to one. If they've been there 1 month, we can accept that, and 2 months from their previous job, as long as there's no more than a 6-week gap in between, because a lot of people out there are taking on new jobs for more money to improve their careers, and it's quite harsh sometimes when you need a minimum of 6 months in the current role when they're doing it to better their circumstances. So we can do that within probation period. Contract workers are accepted, and as I said before, which is still quite a big one, we don't do the credit score, we look at the credit. Home tract valuations are accepted. That speeds up the process. We do that at the moment up to 70% loan to value, with a loan size of £75,000. So we can accept those, which speeds the process up and stops full valuation or internal valuation having to take place, and ultimately reduces the cost for the clients. We have buy-to-let plans with an interest-only option, which we'll do in a minute, and we accept top slicing as well, which is, again, quite a big thing out there when we're looking at the buy-to-lets and how to look at the income. So what do we see coming through the doors at Spring? We see the main two at the top would be debt consolidation and home improvements. I think that's probably echoed throughout most of the second charge market. We see people who want to pay off tax bills. That's usually at the end of the tax year. And old bankruptcies, which we covered. A lot we get coming through are for people who want to purchase a buy-to-let, so looking for a deposit. We wouldn't actually, they work slightly differently. If they want a deposit for a buy-to-let, we tend to wait until that transaction is going through rather than giving a lump sum of money to sit on until they find a property. So it's not a bridging product. So we tend to work with the client's solicitors to transfer the money as and when that remortgage or the mortgage or the purchase is taking place. And that way we can make sure we're taking into account affordability across the whole board, knowing that there's another financial traction coming down the line. So we need to factor that in as well. A family gift, again, if they're looking to gift the kids some money to buy a property or to buy a car or whatever for, we can do that. Business use, as long as it's not a cash injection, we're fine. If they want to buy a property or buy equipment, we can do that. We just don't quite like it when they're using it to inject into the business, as you can appreciate. Car purchase, holiday, not so much, but it's something we see in there. There's 2 car purchases there. Adverse credit. Again, this is where a lot of avenues drop down, and if they have got it, there is a home for it. So if those cases are coming across your desk, please don't throw them away. The old-fashioned thing, put them in the bin. Please give Tony and the team a call, and they'll be able to place those, maybe with Spring, maybe with someone else. But as long as the affordability is there, as long as the suitability is there and the loan to value, there should be a home for it in the second charge market. So the old-fashioned is don't turn them away. Obviously, Tony and his team are there, more than skilled in this area to help you out. Complex income we see coming through if it's made up of a main job, a second job, bonuses, overtime, benefits. As long as we see it's long-standing, then we'll be able to accept it. We do cases within preemption period. We have to factor in some of the percentages left over, but if a client is within preemption, we can still help those clients as well. And as I said, the maximum we're going to go up to is 80% loan to value, and that's based on the gross loan. This is the product guide here. I think you should have this in front of you. We split it into 3 different categories. One is on the prestige range, which allows the clients for a lighter adverse. Those ones who have probably had recent life events and something's happened, which means they've missed a couple of unsecured payments on credit cards, or maybe even a mortgage payment. But very limited demerit points are allowed. So on prestige, the maximum amount of demerit points is 2, and the kind of definitions are over there on the right hand side. We give them a bit of flexibility on unsecured credit. As saying, a lot of people start popping on the 1s and the 2s and the 1s and the 2s, but as soon as they get to a 3, then that's when we consider it to be a demerit point. At present on Prestige, because of where we are in the market, we do allow payday loans, but very limited, and only one in the last 12 months to go on to Prestige. I mean, those rates in their the budgets were in the low 7s, and unfortunately they're now in the mid 9s to 10s. So on the core product itself, allows a little bit more adverse, a little bit more flexible. It's a product where we're looking at what's going on in the mortgage history. It's a product we're looking at what's going on in the unsecured credit, but it's the rate for risk is on there. The good news is that on the core, that is, if you're paying off the unsecured credit, then you can still get the core one on the demerit points. So it's very flexible like that. But again, just because we say we do it doesn't mean we can always do it. So be careful if you look at these cases with declining credit. Run them past Tony and the team first, and he can have a quick look. So you've got the core products on there. And if you get buy-to-let second charge, we can do buy-to-lets as well. Very, very, very loose on, very tight on demerit points, but good products. This is interest-only based as well. We're stress testing the property on the rental coverage we have, and we can always top slice as well. So you've got clients who have the need to use a little bit more income. We can do that as well. It has to pass a minimum threshold to be able to top slice, but it's a good product in the market in the second charge when you wanted to do on a buy-to-let. There's only a few lenders out there at the moment who do this type of product. So if you get those coming across your desk, please do by all means give those to Tony. And again, it may come to spring, it may not, but in the second charge market, as I said before, as long as the suitability is there, the affordability is there, there should be home for it across the whole spectrum of lenders that Tony has access to. Is that good, Tony? Are you all right?
It's great. You're running shortish of time if you want to ask any questions. That's all. So they've got everyone's got the criteria. So maybe if you want to go on to a couple of case studies.
Yeah, a couple of studies. So one here, I'll just do this one on here. Again, it's about life events. People's lives change unexpectedly, and this is where the second charge market can play a key part in your armory, and obviously when you pass it over to Tony. So a typical client here, the wife was off work, having a baby, just gone back to full-time, but in probation period. Missed out an accident, is off work for 4 months. So when he was the main earner, the bills weren't being paid. So he'd missed 3 months mortgage payments in the past 6 months and some credit card payments. But now back on track. Mrs. now obviously back into employment. Their finances and their issues have been resolved. We could see what we were doing would be putting them in a better position. And ultimately on this one, it went on our core 2 product because of the amount of mortgage arrears. It was saving over £250 a month by consolidating expensive debt. So that's the kind of stuff we see coming through spring. It's the life events, and it is the kind of clients whose problems have been resolved and the loan they're taking out with Spring Finance will put them in a better position. We're always very focused on making sure we're putting the clients in a better position. And the other one here is, again, the same thing. It's a life event. Mr. Self-employed, but we see it all the time with self-employed. The contracts aren't being paid on time, and therefore the budgets get messed up, and therefore they start missing payments, whether it's mortgage payments, unsecured loan payments, credit card payments. It's typically a life event, and usually once they hit this bit, they then begin to realize they got to do something about their invoicing, and they put them in a better position. So we talk with the broker the whole way through the process. But the main thing probably to take away from the case studies is what we see is people who've had life events, and as long as we put them in a better position, then hopefully a Spring Finance loan will be the right home for them. Are good?
Yeah, all good. That's great. We've got time for a couple of questions. I mean, really, delegates, this is one of these situations where keeping your clients aware and in regular contact with your clients is absolutely key, because they're probably not going to tell you they've got an issue until it's too late in many occasions. Whereas if you can get in early enough, you can help them, you can help sort it for them, and you can pretty much help them to avoid an absolute catastrophe when it comes to their credit rating, their credit report, and everything that they would hold dear and you would hold dear if you want to write that new remortgage for them in 3-4 years' time when their rate comes up. So it really is just making sure that your clients are aware that you're not just there to help them in the good times. It's also, if things are a little bit sticky, you can also help them in the bad times too. So we've got no questions other than Steve Birkin has told us that base rates have now gone up to 4.5%. So
right, okay, there you go.
That should
That's
absolutely help to reduce inflation, which is at this moment in time being pretty much driven by fuel prices and food prices.
Yeah.
So raising it but now to 4.5% means inflation is going to plummet, no doubt. I personally think this is more political, but that's a conversation for another day. The questions you asked yourself, Graeme. I'm going to ask a couple of these. Will you lend where the applicant has an interest-only mortgage with a shorter term than the requested loan?
Yes, we do. So if the first charge mortgage is on an interest-only basis, we can still lend on the longer loan term.
Okay. And
Generally,
is there a minimum term, allowable term on the existing mortgage?
When it's interest-only, we tend to like a minimum of 12 months remaining.
Yeah.
On that, if they've got a mortgage and it's coming to an end, the minimum time at the moment, because some of the issues we're facing at land registry, the minimum time remaining on the first charge mortgage, we'd like to have at 6 months.
Okay.
But they can still borrow the second charge over 10, 15, 20 years, as long as we're second charge when we complete.
Understand. Okay. Just for everyone, don't ever think that Spring is just there for when people have got sort of like adverse issues and, things are getting really messy. We had a case that we put through Spring, completed with Spring a few years back, and this was before electronic transfers of funds were being made by many lenders, where it was a pending bankruptcy action had been taken out against a very, very clean client by a very dodgy builder who decided he wanted the 4.5 acres of land that went along with the client's house. Did some work for him. It was shoddy, wasn't up to standard. He then sued, went to court, and actually got a bankruptcy petition against the client. We went to the client had been to several other brokers, all went to the wrong lenders. It came to us. We went to the right lender, which was Spring, and it ended up with the day before the court hearing, I took a train from Berkhamsted after collecting the cheque from Spring Finance's offices in Boreham Wood and got the train to Crewe, where I was met by a member of the solicitors firm on the platform, gave her the envelope with the cheque in it. They went to court the next day. I didn't trust to send it by Royal Mail special delivery just in case, because if it hadn't turned up, then he would have been made bankrupt. Went to court, there was the cheque, and he was sorted. And the thank you letter from the client was 2 pages long. And I think he redeemed about nine months later.
Yeah, prime example, yeah.
Sometimes life events can happen totally outside someone's control, and finding the right lender. And we only had 11 days to get that completed, by the way, when it came to us. So it was on a very, very tight timescale because we've been let down right on at the end with another lender who would not do a pending bankruptcy petition. And it was actually found at the very end of the process because the broker hadn't asked the right questions. Graeme, thank you very, very much.
Yeah, thank you.
But we are a little bit pressed for time. Thank you, Andrew. That was an amazing story. That's one of the ones I will still probably dine out on in the years to come. Simon will remove you from the room.
Okay.
I'm going to do the last bit, and everyone will be pleased to hear I'm going to rush through this because temperatures in Berkhamsted have plummeted in the last hour, and my feet are absolutely freezing because there's no heating in our building at the moment. So I need to probably go for a run around the car park or something to try and warm my feet up. So I'm just going to put the final presentation on, which is my bit, and we are good to go. So everyone, this is a little bit, I've began starting these with what's happened recently, but we've really already covered this with Castle Trust presentation earlier on. So, and it says new from today. That's actually, I didn't change the slide from last month, but it is not quite new from today. But just through Castle Trust, not just the exclusive buy-to-let product at 5.89, which is cheaper than their main competitors, but we also have this 80% LTV net. So that's the net proceeds for light, medium and heavy refurbishment bridging loans. Now, as an example of something we've done on this, this was initially given to us last year, but has then moved forward. We did an advance for a client who was buying a property for about, I think it was about 1.8 million. Then we did a 1.3 million advance through Castle Trust on a bridge. That property now has been finished. The refurb has been finished, been completely revamped, and it's just been valued at 3.8 million. Castle Trust are now doing another bridging loan on that, so the client can purchase another property that will also raise funds, and they're not having to put a penny into it. Because we can go to the high LTVs, and it's a net. All bridging lenders work on a gross. So when you hear a lender talk about we go up to 75%, that will be the gross figure, including interest either rolled up or retained, unless the client's making monthly payments, which, as you can imagine, on a 1.3 million advance, no one's going to want to make monthly payments on a bridge. So we have both of those. If you have anything that's sitting on your desk, or anything you've spoken to clients, they're looking to maximize what they can get from a bridge for a refurb, then please give us a call. Say it isn't exclusive. So new for 2023, I'll keep pumping this because we made it easier to download our giveaways. And at the end of today, there'll be a little box will appear at the top of your screen that looks pretty much like, don't try and click on what you see on the screen, because we have had people try and do that before, because it won't work. This is a PDF. So you'll see this appear, and you'll then go straight to the feedback and then the download. So you can watch Roger Morris's Sutton the Specialist presentation back at the beginning of March, or you can download GDPR compliance documents or our product commission and prop fee guide. That's all available, plus a few more. You can register for future shows, all sorts of stuff you can now do on that. And I'm just going to pump this once more because we are probably now limited. Initially, it was limited to a certain amount. We've added another 100 places to this because it is so popular, but it will get to the stage where we can't, if you don't get registered early enough, we probably going to have to put you on a waiting list. If you do want to know more about Consumer Duty, I do say plain English. Robert is a very proud Scotsman, so there is a Scots accent to it, but he does speak in plain English. So, and you will learn. And we will be asking questions that we've come up with that will be very, very relevant. But you can actually pre-book your questions as well with Robert when you register. So please, if you haven't done so, I urge you to do this if Consumer Duty is one of your concerns that you have before the 31st of July, because I know it's one of mine. But that's there for you, of course, as always, completely free of charge. So this is a little bit of information about us and what we can offer you. For those of you that haven't used us before, for those of you that are new to today, this is just a bit about us, because we are, I think we're very different to what I see as our main competitors out there, for reasons that I'll cover in a moment. But just a little bit, for those of you that don't know who we are, obviously have never heard me speak before, you don't know whether I'm sitting here giving you a pack of lies. I've not been in the industry for 40 years. I've been in the industry for 3 years, that type of situation. When it comes to compliance, this is what the NACFB have said about us on their annual compliance visits. This was the first one they did, which was basically, do not see what you do as moving the goalpost, more of a case than better than best practice, particularly considering resources you have available. So very well done. They told us we were the best within the compliance side of things. We were the best by a country mile. And that's from over 1,000 brokers that are members of the NACFB. So that was the first one. We had another one in 2020, just prior to lockdown. Can anyone hear me now? Or we've just rebooted everything. Yay! You can hear me. Marvellous. They just hate technology. Right. For those of you that are still here, unfortunately, we've lost a few people because they probably thought I'd gone for good. So I've no idea what happened there. I've just had this vision of Bill Gates sitting somewhere in an office over in America, sabotaging what we're doing because we're not using Microsoft Teams. So where was I? I've lost a little bit of time, so I'll try and catch up as much as possible. Thank you, everyone, for hanging on, those of you that are still with us. So as I was saying, I'm not quite sure where you lost me, but a partnership about two entities trusting each other. Obviously, that's why we call you broker partners, and we're not a master broker. And we want to help you grow your business, and hopefully we demonstrate that with some of the things we do, such as GDPR and other bits and pieces that we have. And we always have a solution for your business, whether you're DA, AR, exempt professional, or not authorized. Not authorized is a little bit more difficult these days because of PI cover restraints, but we'll do whatever we possibly can. We want to make sure you stay informed and compliant and are completing business indefinitely. And I'll get myself back on track now. So after that little, I hate technology. I really do. So here we are, our products, everything except for equity release, as you can imagine. And we are incredibly experienced in all of these. We're not a company that's just like cropped up 3-4 years ago, like some of our competitors that use the word specialist finance in their names. and have got literally no experience within those industries whatsoever. We are incredibly experienced. I've been doing this 40 years. I've got members of staff that have been in the market since 95, 97, 2001. So we do know what we're doing. But that's exactly what we do. I say we don't touch equity release, but anything else secured on property, we can help you with. Our service, packaged or introduced only, either we give the advice or you give the advice. It doesn't matter to us whether it's regulated or non-regulated. We treat it the same as far as the advice process is concerned. And that's one reason why we don't get complaints, because we do treat it exactly the same. We're very, very thorough in what we do. But you decide. It's not a case that you have to either give the advice on all cases or we give the advice on all cases. You can chop and change on every deal that you pass our way, and you decide who actually is in control. That's your choice. And why are we different? It's not the products we offer, other than obviously the exclusive products we get from lenders from time to time. It's the people we employ. And to get a job at my company, the person coming for an interview has to have 5 years, minimum of 5 years experience in specialist financial services, not working behind the counter at Nationwide, actually within what we do. And I don't take on people just out of university or anything like that and try and train them up, because they do not have any life experience. And that is also important. The people you speak to in my office are mature with life experience. They are someone you can have a conversation with. They're not somebody who's just out of university and really hasn't got a clue how life works. And on the rare occasion that something goes wrong, my staff and myself, obviously, because we are so experienced, we recognise it, can always recognise it early and deal with it in the proper way. Whereas in previous companies that I've owned or previous staff that I've had, you tend to find that people who are new to the industry try and hide it. My staff don't. They will deal with anything. When the rare occasion something does go wrong, it gets dealt with straight away. And our lender relationships, you've probably seen from today, we've had 4 lenders. My relationship, as with any company, my staff will deal with the underwriters and maybe supervisors and underwriting managers. My contacts are at director level, at CEO level. That's who I speak to when we need to maybe get a decision on a case, or maybe we've got something that really just needs a little bit of a push to get over the line, or I just need something jumping the queue, for example, which I've managed to do with a very large bank recently, who had a 3-month working turnaround on viewing valuations. And I managed to get one right to the top of the pile, whereas it was probably 2/3 of the way down the pile. How seriously we take compliance and the prevention of financial crime? We have a little bit of a space at the moment of customers who all of a sudden have second jobs that are paying them extraordinary amounts of money that we know aren't genuine. So we're doing our best to ensure these people can't borrow money or can't defraud the system, because it's not good for any of us. And it's not our numerous awards from the financial press. I used to go into a whole spiel about this with various slides. I don't anymore. Basically, I can't stand the broker award system within the financial press, because it's about as corrupt as it gets. So you will not see us win an award, because I'm not prepared to pay the bribes that quite often had to go along with it, or the advertising spend that has to go along with it to get that particular award. I have no interest whatsoever. So there you are. What else we can offer? You get designated underwriters from start to finish. I've always found that works best, rather than having different departments, or a sales team, underwriting team, processing team, completions team, and you're dealing with 4, 5, 6 different people throughout the process. One person from start to finish. Obviously, the only exclusions to that are if someone's on holiday, or when we get to completion, which is quite often I'll get involved when solicitors are involved, because we know what solicitors are like. If there's 2 solicitors involved, they've got to stretch out as long as possible to justify their fees. And the other time I get involved is on completion, where we pay your commission immediately on the day of loan completion, as long as we have your bank details. And I have to stress this, as long as we have your right bank details. You wouldn't believe how many I get over where the digits are wrong, and we can't pay our broker partner the money they're due, because there's no such bank account. We don't have any commission clawbacks. So if something does, the only time we would claw back a commission is if a fraud case was to get through, and that hasn't happened in, I can't even remember the last time that happened, or if the client cancels the contract within a certain time period, as some lenders will now allow, normally within the first 14 days. That's the only time we would claw back a commission. What else we can offer? All our inquiries are pre-qualified. Now, we're very lucky, because within the second charge market, second charge lenders are quite lazy, and we have to do the entire process from start to finish, pretty much until their underwriters get involved. But we have the facility to obtain Equifax and experience searches from day one. Now, we all know clients sometimes are not are not particularly truthful when it comes to what their credit record might be. And also sometimes it might not show. You might ask a client for an Experian report when lenders use Equifax, and quite often the information that shows up on the two is very, very different. It depends on who subscribes to those particular agencies and to what information they provide. So we do this right from the start at our own expense, as long as we've got the client's permission, and that will save an extraordinary amount of time in the processing of a deal sometimes, because as we know, some clients do lie, some clients might not know about problems they've got, but we find out about it straight away, and we can then cover that straight away with a lender, rather than giving them the opportunity to decline a deal because the client's got 3 months arrears on a utility account that he didn't know anything about. So we can deal with, we will know straight away before we even submit the case. What else can I offer? We have designed our own in-house software, loan quote, commercial quote, and bridge quote, because we found that what was available, not obviously in the first charge market, because what's out there is adequate, but when it came to second charges, commercials for second charges was very, very poor. Commercial was non-existent, and bridging was quite laughable, what I see available out there at the moment. So we came out of our own. It's in-house, but it means you can phone us and say, I've got this deal, and we can run it through our system, and quite literally within a minute, we can give you details of the quotes available that are available for your borrower. And you can then go back to your client and say, yes, it's going to cost you approximately this much, and you can get the process started without all the rigmarole of having to troll through each lender's criteria one by one. We can do that and give you up to 4, even more if we wish, options that are available to the client. And Colin said Colin Taylor, I was guilty of giving you the wrong details, but you paid quickly once I gave you the right details. Thank you for clarifying that, Colin. New this month, well, actually it was new last month. I must change. I did these slides very late last night, so there's a couple that I've missed. Our speakers have obviously discussed all the ones I've got in blue there, but they haven't discussed anything in the regulated first charge market. So as I did last month, I'm just going to cover this time one lender, which you're probably all aware of, but just to give you a little bit of update as to what they're doing and where they are in the market, and that's Together. Now, Together back in 2020 when COVID hit, they pulled the plug pretty much immediately, didn't really return for a good few months, which was unfortunate because a large amount of clients can't really go anywhere else, which is why they are so successful. But when they did come back, they came back with a totally different way of working, in that previously they went to the entire market. The problems that gave them was it really did stretch their resources to the hilt. And they realized that they needed to try another way. So what they did, they went out to a certain number of companies, and we were lucky to be one of those. So they've now got probably 20% of the introducers on panel that they had previously. But since 2020, they have doubled their profits and doubled their volumes. So their method is working. Not so great if you can't get on their panel, but we have things in place so that you can still access their products at really not much of a loss to you, financial loss to you. So with regards to the first charge market, this is just a refresher for you more than anything else. So when it comes to property and general criteria, they accept almost any property type in England, Wales and Scotland, and they will also include some of the Scottish islands. You've probably heard a couple of speakers there who said they will not accept Scottish islands. Well, for example, I'm trying to think which island it is. It's actually connected to Scotland by a road bridge, but you try and find a lender that's prepared to lend on that island. Well, Together will, and quite often do. It wouldn't surprise me if they got half the properties on that island actually are mortgaged Together. But it pretty much cover the whole of Great Britain, I suppose we can call it, obviously excluding Ireland. If you have properties with extensive land, and we all come across those from time to time, or agricultural restrictions, Together can help. Semi-commercial owner-occupier, where as long as it's got at least 40% commercial, they would do those. And that's also those ones which are fairly rare, but where you're accessing the flat above through the shop. Try getting a mortgage on one of those through even some of the specialist lenders, or almost all of the specialist lenders. They just don't do it. They don't like them. They want separate entrances. Together couldn't care less. Right to buy 100% of purchase price, same with shared ownership. They ignore adverse if over 12 months old. Any adverse, that is, doesn't matter how big, that has no relevance whatsoever. Anything over 12 months, ignored. And they will accept adverse credit in the last year. Up to 4 applicants accepted and interest only available. And that might sound fairly obvious, but they don't stress test. They actually stress test everything on interest only, rather than any sort of complicated or ridiculous calculations like we see with some other lenders. And when it comes to income, this is where their real strengths lie. No loan to income calculation, which is fairly rare in our market, very, very rare in our market. And that means, I mean, we've seen cases go through them that have been 9, 10 times income. But for those borrowers who are earning 150 grand a year, it really doesn't have that much effect on them. Almost all types of income accepted with no minimum income requirements. There's very little. I mean, housing benefit is probably the only one they don't accept. But how many of your clients will be receiving housing benefit? Probably fairly low. ONS outgoings can be overridden, so the system will initially use ONS statistics to calculate affordability. If it fails, we can then override that by using the client's I&E. And as long as it makes sense, as long as we haven't got a client with a married couple with 2 kids saying they live on £20 a month for food, we can get that overridden. Self-employed, latest year's figures, projection, retained profit, they'll accept all of those situations. Self-employed, only trade in 12 months, and 0-hour contracts, employment accepted. So together, if you haven't got access to get together directly, there will be an element of your business you can place, and we are more than happy to help you place that because we're one of the lucky ones that's been given package status. So quite simply, if you do want to give the advice, this is our regulated first charge panel. So you'll see there's a couple on there that might be, or several that will probably be well known to you. West One, Precise, Family, Dudley we've just taken on board, excuse me, and Tandem, who are fairly new to the market. There's a few others there. Some of them do the smaller ticket stuff, but again, very, very useful in certain circumstances. Wanting to just beware of the bandits, because I'm talking so fast, my throat started to close up. Excuse me. That's better. Beware of the bandits. Now, this is a problem we see time and time again. I use this one because it is the worst one I've seen in all the years I've been doing this. Previously, it was one where they earned 45 grand and the introducer got paid 7. Well, this one, introducer was paid 7. And the master broker, 117 grand. Just be careful who you're dealing with. We're very transparent. That's why we issue a commission and prop fee guide, so you can see what we earn, what we pay you. You can compare it to others. There's some absolute cowboys out there. There really are. Just be careful who you deal with, and just ensure you are getting your share of what's actually available, for the income that's available from the deal. A couple of case studies. This one, we've actually done 2 bridging loans now through Roma Finance for this client because he had some issues with planning. But it's now a 20-bed HMO, was previously planning for a 10-bed. He's now got the planning sorted. And we are now, that case is now going through Castle Trust. It'll be the 3rd transaction we've done for the client. It's going through as a 2.1 million remortgage onto a term product. Because of where the property is, it's not one for the mainstream multi-unit freehold block lenders that are out there, or even many of the specialist lenders. But Castle are now taking this deal on. So far, the introducer has earned 46 grand from this, paid on the day of loan completion into his bank account, no questions asked. And on the next one, I can't quite calculate what it's going to be because my math is quite limited, but it's going to be another significant amount that's coming over to him. So he's going to be earning a very decent amount of money from this client, and a very happy client as well, because what he's actually, the security he's got and the income he's getting from this property is enormous, absolutely enormous. Another case study. I'm very wary of time now, so I'll probably skip through a couple of the other case studies, but this was the most difficult case I've ever been involved in that we completed last year. Clients, a family of 16, husband, late wife, she passed away 3 months previously, and 14 children, all of which were shareholders. Refinance of 19 properties where the term had expired on the existing mortgage with Nationwide. 2 properties had regulated tenants. 6.4 million advance was required to repay Nationwide. 5 properties still have mortgages that should have been repaid 16, 20, that's 20 years ago, because the solicitor acting for the client have been creaming off them for 2 decades and not doing any of the work he should have done. 1 lease on 1 flat didn't exist because he'd never submitted the documentation to Land Registry. 1 property was offered as security that was actually sold in 2012. It was horrendous, absolutely horrendous. We got that through, and the introducer, as you can imagine, when he got 45 grand from the case on the day of completion, was very, very pleased. This is what he said. I won't read the whole thing because we are limited on time because of the technical problems, but if I could give more than 5 stars, I would. Basically, this is somebody who's now semi-retired after being a mortgage broker for many years. And he told me recently he's earning as much now, or if not more, than he was when he was in a full-time mortgage broker. Because we're hoping to get so much business through that he wouldn't believe we could ever get through because of our contacts and our panel of lenders. So again, I'm not going to read all that, but one very, very happy broker partner. I'm not going to cover that one because, as I say, we are running out of time. I will cover this one, though, because this one's always important. It's not what you know, it's who you know. Husband and wife business running 2 very, very profitable children's nurseries. Mr. ran the financial side, including paying the staff and supposedly paying HMRC the tax and national insurance that was being collected, which he didn't do for 18 years. 850 grand later, he was caught, sentenced to 5 years in prison. She divorced him, but anything in Mr.'s name out of proceeds a Crime Act charge. And as you probably all know, if you've ever come across one of those, trying to raise finance through a lender is nigh on impossible because of reputational risk, which is what every single lender will say. Barclays are called in the commercial mortgages. She was going to lose a lot, her home, her business, everything. And she had 300 grand sitting in the business account. That's how profitable the children's nurseries were, but the proceeds of Crime Act charge was £1 million. So what did we do? We've been to a number of brokers, I think 5 or 6 different brokers previously, came to us, we contacted together, underwriter, we spoke to the underwriter who went to compliance department, and compliance department having to justify their existence had gone, no, we're not going to touch that. Case given to me. I then contacted a directorate together I've known for over 3 decades, and I considered to be a good friend, gave an overview of the case in the background, took it to the compliance department. A very, very different scenario when you go to a compliance department. With a director goes to a compliance department, an underwriter, and of course they said, yeah, okay, yeah, we'll do that. And they did. And we did it. We paid off Barclays, we paid off Northern Rock mortgage that had expired, and all the other debts under the proceeds of Crime Act charge, introduced around just under 12 grand. And the client is someone now that comes back to us frequently for further money. And it's now gone entirely back onto the high street across the lot. And we saved the business and we saved her home. So cases you can't place, various ways of doing that. You can decision in principle forms we sent you this afternoon. You can go online on our website and submit online, or just give the team a call on the number there, or any of the numbers you've got. They're awaiting. They're ready to take your calls. You should receive a LinkedIn request from me if we could find you, and if you're on LinkedIn, of course. If you haven't, it's probably because you might have a common name and we can't find you. So if you haven't received one from me and you are on LinkedIn, please then send a request to me, and I will obviously accept it. And that way we can keep you up to date with future events. I'm trying to get to something that I know a couple of you have already asked about. We will send you one of these today. So we do need a signed agency application form from you in accordance with FCA rules. But it doesn't mean I can't take a case from you. It just means I can't pay you commission until we receive that signed copy back. So, but that will be sent to you this afternoon. It's a 1-page document with about 5 pages of the usual small print that nobody ever reads. And then a signature is required, and that's it. Next specialist mortgage web show is on the 8th of June, and we've got Roma Finance. We've got Together, who are talking about the regulated side of things, Hampshire Trust Bank and Family Building Society. So that's on the 8th of June. And another 5 shows after that. You can sign up for as many as you wish. You're not just limited to one. If you want to attend every single one, we always try and get different lenders, talk about different subjects, every single one we do. So please attend as many as you wish. This is the one thing that some of you have been waiting on. So if you wish to, when you leave, this button should appear literally any second. I hope my IT team is at their desk and they're about to make this appear. Technology, there it goes. It's there. Don't click on it yet. But when you do click on it, it will take you to the feedback page. Please leave the feedback for us that we asked for. That just gives us an idea of how we can improve things, such as maybe getting different software to do our presentations. But also gives you links to future shows and also to sign up to the Sutton specialist shows and watch previous ones as well, should you wish. CPD sticker will be emailed by close of business tomorrow. If you don't receive, give us a call. It might be in your spam folder, so check there first, but give us a call. And I think, actually 2 more slides. Feedback, if you could just help us out, just go onto Google, type in Google Review Specialist Hub or Trustpilot Specialist Hub and leave us a review if you'd like what you've seen today. That would be great. That will really help us out, just to get our star rating, maintaining our 5-star rating on both of those. So please help us out if you possibly can. And thank you to Castle Trust Bank once again for being today's sponsor. So I can't see the next slides because I've actually run out of screen space, but here it is. Thank you for attending. Apologies for the technical difficulties, totally out of our control. I'm chucking away this Chinese-made microphone that I've had now for 3 years and see if I can get myself a better one. So next month, if you attend, you'll probably see one of those great big microphones they use. I'm not going to sing though. Stay safe, stay prosperous, and don't forget, click on the feedback and download giveaways, the button at the top, and we'll see you next month, hopefully. Thank you.